This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney. It is Jobs Day. Our focus, 8:30, 90 minutes away. Paul, 240,000 fully employed America, maybe not.
I mean, I'm looking at an unemployment rate sticking pretty steady there at 3.8%. I'm also going to be looking at the average hourly earnings on a year-on-year basis. At consensus is 4% growth in earnings. That's pretty solid.
Yeah, and I totally agree with you. Wage growth is where to go here for the analysis. We'll go beneath the headline numbers at 8:30, but lots of other stories as well. Paul and I are fulminating. I mean, we're fulminating. Tucker had to medicate us here. I had to have extra tang to get into the opening here. History made yesterday by Apple, and I don't think enough was said about a 1/10 of a trillion share buyback commitment. I'm going to say out 1 year.
Yeah, exactly right. I mean, it's just $110 billion buyback. That's basically, folks, equal to their entire free cash flow that they're going to generate over the next 12 months. They're going to use that to buy back their stock.
With the dividend lift, 4% dividend lift, I modeled out. Complete amateur effort, folks. Don't take this as a round number. Good morning on YouTube. I rounded out like 116 billion, which is a number I can't fathom. Benzinga with a really great worker. Thank you, Benzinga. The value eclipsed the market capitalizations of 419. Wow. 84% of the S&P 500 have a value less than the share buyback of Apple.
Exactly right. And they had a pretty solid quarter as well. I mean, came in a little bit better than expected. The revenue was down, but they're talking about turning over into growth next quarter, and that's something that the stock likes here. It's up in pre-market trading.
And margins solid as well. Mandeep Singh on a Jobs Day will give us Apple perspective here in a bit. We are out on Apple CarPlay, on Android Play as well, and on YouTube, search Bloomberg Podcast. It goes, what a successful April. Thank you so much worldwide and across the nation for us, this new distribution of YouTube. And it's at Bloomberg Podcast is where you see that. I don't know what else. There's a live chat. John Tucker's on the live chat. Does John Tucker, does he have a phone that can get
his flip phone might
think
link into it somehow. We'll have to see.
The BlackBerry can.
Yes,
I don't think the BlackBerry can get
I don't think so.
Live chat from the Interactive Brokers Studios. Our Bloomberg Business Flash with a BlackBerry, John Tucker.
All right, stock futures this morning. Tom and Paul getting a lift from tech shares specifically. As you say, Apple, it is among the most actively traded in the pre-market right now, down 6.1%. The company posting stronger than expected sales, also predicting a return to growth in the current period and a record share buyback. Right now, the S&P futures 15 points higher. NASDAQ futures up 104. The Dow futures right now up 279 points. Of course, the big focus for investors comes later this morning. Jobs report 8:30. Jobs growth expected to remain strong. Consensus, a rise in non-farm payrolls of 240,000. Ahead of that, bond traders pulling forward the expectations for the first interest rate cut from the Fed. That fueled a rally in treasuries ahead of the jobs report. And your earnings scorecard with in the S&P 500, 398 of the 500 companies reporting so far, 79% delivering positive earnings surprises. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. She'll be back, I think, Monday, so don't worry. Monday.
But she was on assignment.
We should say, and folks, seriously here, there is a horrific shutdown on I-95 in Connecticut.
Spectacular explosion. Unreal.
It's above Stamford. It's closer to New York City than you think. It's not out, past Bridgeport, past Groton. It's close. And just for everybody within the region, this is going to be a mess for 3 or 4.
And that does have an economic impact because it's 95, the major corridor from
it's
along the East Coast.
It's 150 gajillion cars a day. It's some ginormous, unimaginable number. Michael Barr will keep you up to date on that through the morning. We start strong with David Rosenberg from Toronto. David, I'm going to go back to one of the highlights of my first quarter, which was an hour with you on stage in Toronto, and you riveted a packed room talking about the Canadian economy. I saw a scattered chart yesterday of American stagflation, not exceptionalism. Why is America doing better than Canada?
Well, I think there's probably three reasons for it. Canada does not have a Biden CHIPS Act where we're subsidizing investment to make Canada the great semiconductor power once again. So, of course, that's a protectionist policy, and it's fueled a boom in manufacturing construction in the United States, point number one. Part of that is, of course, a broader picture of fiscal policy. I wasn't a big fan of the Trudeau budget, but where's the deficit to GDP ratio in Canada is basically stuck between 1% and 2%. Where it is in the U.S., it's north of 5%. I mean, you still have ongoing massive fiscal expansion. Nobody in the world has the fiscal expansion that the United States has. So that's, of course, influencing average demand growth. And on top of that, on top of that, 30-year fixed rate mortgages, households in the United States who are mortgage borrowers who are lucky enough to lock in at the lows, they've been sheltered by what the Fed has done.
Yeah, we call that David, the Sweeney effect. So there's the layout, folks, on this on the fiscal expansion in the United States. Fold that, David Rosenberg, into the jobs report this morning. Do we have a fake labor economy because of all that American stimulus?
Well, I wouldn't call it fake. The government, whether you like it or not, is part of the economy. But if you're asking me about fake, and I don't want to appear to be a conspiracy theorist, but I haven't seen a lot of people talk about the data from the QCEW that came out last week. That is census data. It's not a sample. And it showed that over the year to the third quarter of last year, since it's a complete database and so it's lagged, it's showing that non-farm payrolls have been overstated by roughly 70 to 80,000 per month. That's from the QCEW. That is not a sample. It's not influenced by the birth-death model. That is the full sample of, call it 12 million entities, not 700,000. Establishment as part of the payroll survey. Everybody's going to knock themselves out talking about payrolls today. There will be unfortunate traders trading around what is really faulty data. Part of that is because of the ultra low response rate, but also the birth-death model is dramatically, the estimate of employment from net new business creation, that is giving a false glow to the data. And that's really what was revealed last week in the QCW. So it's not, I wouldn't call it fake, but it's overstating the extent.
That's where I would go.
We're
not going to have David say that. Paul, I'm going to say that it's fake. And what matters, Paul, is the revisions that we see this morning at 8:30.
Exactly. So, David, given that backdrop and what we've seen in GDP and what we're going to see here today with labor and what we heard from Fed Chairman Jay Powell this week, what do you think the Fed should do over the remainder of 2024?
Well, look, I think that they've already over-tightened, and Powell, I thought one of the more important things was he said that policy is restrictive. Again, my problem with the Fed is with this particular version of the Fed, which is different than other Federal Reserves that I've seen in my 40 years in the business, is they are so anally retentive focused on lagging and contemporaneous indicators. And so that's really what bothers me, because I think they are on the verge of making a policy misstep. They over-eased, and we got the inflation bulge. At least we know transitory was 18 months. And now I think that they've over-eased and then they've over-tightened. And we'll know that with the fullness of time as to the damage that they've done to the economy. I mean, a lot of businesses and consumers managed to lock in. But this higher for longer means that as the debt rolls over at interest rates that are about 300 basis points above their origination, that is going to bite hard over the next couple of years.
David, we're out of time. I'm sorry, too short a visit. Just simple, one more important question. Leafs or Bruins?
Well, if the Leafs win, I have to leave the city for a couple of weeks. I'm talking about if they win the Cup. So I'm not going to alienate all my Toronto friends and say that because historically I've also hated the Bruins probably more than any other team outside of the Flyers.
Good.
But if the Leafs win, I'm coming to visit you in New York.
So much hate from David Rosenberg. You see how he throws the Flyers under the bus?
Yeah,
Just
everybody does.
David Rosenberg, thank you so much. Should be in Montreal, where he and I believe hockey used to be played. Futures up 17. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. One of the nation's busiest highways is completely shut down in a bustling area of Norwalk, Connecticut. A massive fire erupted when a gasoline tanker crashed and managed to severely damage an overpass. Governor Ned Lamont.
It involved the tractor-trailer truck, it involved the fuel truck, it involved the passenger automobile.
No one was seriously hurt, but this could have a huge economic impact in the Northeast. They started dismantling the fire-damaged overpass this morning. They hope to reopen it on Monday. We'll hear more testimony today in Donald Trump's criminal hush money trial in New York. Yesterday, the lawyer who negotiated Stormy Daniels' $130,000 hush money payment, Keith Davidson, said he texted an editor at the National Enquirer the night Trump won the election, "What have we done?" Davidson says it was gallows humor. At the end of the day, before reporters, the former president falsely claimed the gag order prevents him from taking the stand in his own defense.
I'm not allowed to testify because this judge, who's totally conflicted, has me under an unconstitutional gag order.
Trump said his lawyers would be appealing the judge's limited gag order. America's top defense officials spoke to reporters last night in Hawaii following multilateral talks with his counterparts from Australia, Japan, and the Philippines. A reporter asked Secretary Lloyd Austin whether there is credible information suggesting Hamas might attack U.S. forces as they set up and operate a floating pier off Gaza for aid deliveries.
I don't see any indications currently that there is an active intent to do that. Having said that, Phil, this is a combat zone, and a number of things can happen, a number of things will happen.
Meanwhile, there's word Israel and Hamas appear to be seriously negotiating an end to the war in Gaza and the return of Israeli hostages. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, and John.
Long rebound, Hart looks to push. Ahead to DiVincenzo. One-on-one with Maxey. Steps through, kicks it out. Brunson again. Knocks it down. 2 in a row for Jalen Brunson. Shot clock at 18. Brunson up top. Hart. Wide open. Three-pointer. Fires away. Knocks it down. Josh Hart puts the Knicks up by 3.
There it is. I mean, I got goosebumps and I don't even care. I mean, this is really exciting. The Indiana, coming up in a couple days. Paul, are you going to the game?
I may. We'll have to see. But I mean, the Pacers are really good.
What do you do? Do you like rent out the beach house to get the cash flowing for that? What is it like? With your seats, it's like $10,000.
Well, I make a phone call or two, and I find a seat somewhere in the building. But I mean, the Pacers, highest scoring team in the NBA. But the Knicks play defense, so that's going to be a good defense going up against a good offense. That'll be fun.
What Bloomberg Business of Sports? What's this do to ratings? It's got to be nirvana.
Oh, it's a great matchup. By the way, was it Hart or Brunson to put up 41 last night?
I'm guessing Brunson, right?
Yeah, I guess it's Brunson.
Yeah. Yep.
But yeah, man, this is a great matchup.
This is great. I've never, in all my time at Bloomberg, I've never enjoyed May with the Knicks. It's like ancient history. It's that simple. Futures up 16 on Jobs Day. We'll have all that at 8:30. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Markets could be set up for a tech-driven rally after Apple forecast return to sales growth and announced the largest stock buyback plan in U.S. history. We're going to break that down in just a moment. Pre-market, Apple shares up about 6%. Before the cash open, we're going to get the reading on the jobs market. The forecast gained 240,000 jobs. That actually would be the weakest since November. It comes at 8:30. Money markets fully pricing at a quarter-point cut by November compared with December previously, and a 50% chance of a second reduction this year. NBA targeting $76 billion in TV rights over 11 years, 3 times the current deal. This according to our sources. Disney and Amazon have agreed to the framework. Warner Brothers raising Comcast for the third package. Dow futures 274 points higher. S&P E-minis up 17. NASDAQ futures up 110. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John thinks it's like an Apple buyback. The NBA $75 billion.
Unbelievable.
What do you do? I mean,
I don't know. I don't know.
76.
Cut the ticket price?
Yeah, exactly. I don't know how they make money on that because cord cutting, the audiences are lower, the advertising. Will the streaming make up for it? I don't know. It's just amazing. But what we always say, during our entire lifetimes, sport rights never ever go down. They just go up, and they don't go up 10% or 20%. They double, they triple.
We'll find time to talk about this. It's an unimaginable number. Speaking of unimaginable numbers, Mandeep Singh joining us now on Apple. Mandeep, I was like on fire yesterday, like 4:45 with a beverage in my hand, because of all the mumbo jumbo about product and not enough about the 4 accounting statements and the technological excellence of this company. Mandeep, I'm going to bring it right down to the EBITDA margin. Pandemic, 29.4%, and it's now modeled 34%. How does Apple grow that margin? How do they get from 29% out to 34% EBITDA margin?
And that too with almost no top line growth. So that's the beauty of, the money machine that Apple is. And look, I think they announced the biggest buyback in the history of S&P 500. And that just goes to show that when it comes to capital allocation, they are probably the most shareholder friendly, even if, the company has got a lot of headwinds. There wasn't much to cheer about in terms of, a replacement cycle driving top line growth. Yes, they said it's going to be low single digit growth next quarter, but really it's the comps have become so much easier. Right. The fact that they're talking about low single digit, it's not much to cheer about, honestly.
Their return on invested capital on the Bloomberg is 55%. I don't know. First of all, folks, there's nowhere in my textbooks where that number exists, for starters. Mandeep, do you look at it like Rockefeller and Standard Oil, that if they're making that much money, that much ROIC, somebody should break them up?
Well, so look at Apple and compare it to, the other hyperscalers in the Max 7. I would say Apple is still somewhat of unique in the sense that, it's mostly hardware driven. Yes, you've got services, but there isn't a big case to break them up. Like what are you going to take out and divest when it comes to Apple? So to me, it's still the DNA of the company is all hardware. And yes, they have created an ecosystem and an operating system to tie that all in, but you can't take any parts out of Apple and divest it.
Hey, Mandeep, I know going into the quarter, one of the biggest issue for investors and analysts was China. Talk to us about what they disclosed about their China business.
Yeah, I mean, it was down 8%, much better than feared. And I think the commentary suggested it's not as bad as what people make of it. So clearly they were downplaying the fact that, the unit shipments were down and most of that decline, the reason why it was 8% and not more is because of ASP growth. But they also conceded that it's a very competitive market. So really, it wasn't crystal clear in terms of which direction they were saying the China business is headed. But for the time being, it's not as bad as feared. So I think it's a positive.
All right. And the next big catalyst, I would argue, is that they have an event in June for their developer conference. Is that where we're going to get an oh, wow AI offering from Apple?
Yeah, and they did suggest that they are open to working with hyperscalers. In fact, when you compare Apple's CapEx to all the others, hyperscaler CapEx, it's almost nothing in terms of, what they are doing around building data center capacity. So they're actually using Amazon, Microsoft, and Google's data center capacity now for the AI stuff. And I wouldn't be surprised if they use Google AI on the device for their AI assistant. So clearly Apple is behind when it comes to AI, but what we heard last night is they're open to partnering it, and that's how they are going to move forward.
And Mandy, I got to go back to your world. In first principle, folks, you say, well, how does this stuff happen? And I've always said, forget about the product chit-chat and all that. It's about the 1 nanometer chip or the 2, whatever. I don't understand this stuff. Mandy, is the chip the next time around when afterthought in, the middle child, both of their phones break, plus or minus 10 days from the meeting that they have in Cupertino where everybody wears a black turtleneck.
And then they have to get the
new phone.
Upgrade
Mandy,
cycle
is the
in
new
Keene
chip
household.
that big a deal this time around?
It always is with Apple because their biggest asset is their vertical integration and the fact that they keep innovating at the chip level far better than anyone else can because they own that entire stack. And I wouldn't be surprised if they layer on, much better memory configuration in the next version of their chip, which can run AI better. So I'm not expecting Apple to innovate on the software side, but the innovation will be more at the chip level and the hardware side. And that's the bull case for Apple.
We're showing on YouTube some numbnut with the goggles on. Paul, we got to go to Mandeep on this. Mandeep, you said AI 14 times in this interview. What exactly, when John Tucker gets the iPhone 18 or whatever it is, what is he going to do with AI?
I mean, the AI can pretty much run his phone in the sense it can free up a lot of time in terms of what email he needs to look at, helping you schedule your meetings in a far more efficient way rather than going into the calendar and schedule. And look, the systems are getting smarter and it will happen.
It will happen.
Did I get an iPhone?
Mandy, I'm asking for a friend. Can AI on the iPhone help John Tucker calculate his congestion tax?
That I don't know. I'll leave that to John.
Mandeep Singh, thank you so much for the update here. Absolutely stunning. And Paul, as an aside here, moments ago on Bloomberg Intelligence, Robert Schiffman, working from home.
I saw that.
See that?
I saw that.
He's got the large life.
Yeah, that's how the kids do it these days.
It's the way it rolls. He's at the beach house.
Yep.
He says Facebook has tons of room with a AA3 to issue bonds, I guess notes and bonds. And I love this, supporting an even more aggressive shareholder return philosophy. I'm sorry, I took the Lemmings school. My MBA was they're all lemmings. Every CFO has to say, what are we doing about share buybacks this morning?
I know, and Rob Schiffman's been aggressive on this, and he covers the debt of some of these big tech companies. I'm looking at the balance sheet for Facebook, the kids call it Meta, $38 billion of long-term debt, but they have $60 billion of cash. So basically no net debt on the balance sheet. Oh, and by the way, they're going to have $90 billion of EBITDA this year, going to $100 billion of EBITDA next year.
Yeah.
The market's open. Rob Schiffman can probably place that debt with a couple of phone calls.
Yeah, I was going to say, I mean, really, if Facebook came out and said, I'm going to make the number up, folks, $20 billion of bonds.
Yep. Boom.
5 or 6 phone calls.
Yep. Absolutely.
It's not an exaggeration.
No, not at all. Not at all. So, and we've seen that. And people ask, why do you issue debt if you don't necessarily need it? And the answer is because you can. And you buy back stock and your stock goes up and you're still an investment grade credit and all's right with the world.
We're going to continue to cover this through this morning. We're referencing Ed Ludlow. He's out on the left coast.
I saw him on social, so he is awake, Rich.
Oh, he is?
So, yes.
Oh.
So don't let him, don't let him go to voicemail.
It is Jobs Day in 1 hour. Some people saying this could be the month where we see a shortfall. We will see. Jurrien Timmer with us at 8 6:30 from New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. In the pre-market right now, you have tech stocks leading gains. The pharmaceuticals, they're the laggards right now. Apple, among the most actively traded right now, up 6.25% after the earnings, after the close of regular trading yesterday. Bloomberg Economics saying April's non-farm payrolls print coming up at 8:30 Wall Street time is shaping up to be another robust one. Some of the individual shares that were on the move, Novo Nordisk share sliding. Amgen's CEO said he was encouraged by early results from a study of its drug, Maritide. That's added to Thursday's 2.7% decline after the Danish drug maker reported sales of Wegovy that missed analysts' elevated expectations. Right now, ahead of the cash open, Dow futures up 306 points. S&P E-mini futures, they're up 21 right now. The NASDAQ futures, 120 points higher. Let's finish up with Treasuries. 2-year, the more policy reactive, dead flat, 487. 10-year, 465. Well, I'm not wrong.
No. Lisa Mateo wouldn't
Any
say
opportunity. Any opportunity.
Very good. Thank you. John Tucker, thank you so much.
She's back
Greatly.
Monday.
Thank you so much. John Tucker, doing it all this week. The hardest thing to do in economics is when you're hired and what you do is the wheelhouse of the person hiring you. So Sarah Wolf has the worst job on Wall Street because Ellen Zentner owns a high ground on consumer analysis. What are we doing? 70% of the economy. And she hired Sarah Wolf under duress and said, hey, do the consumer, do what we're doing under the economy. Sarah Wolf, with the worst job in economics at Morgan Stanley, joins us this morning. You people beneath the headline data are really looking at immigration and the effect on our job numbers, our effect on productivity, our effect on American exceptionalism. What have you learned?
We've learned that we have much stronger population growth. So the economy is a lot bigger. It's not tighter. It means that we could be adding a lot more jobs without it being inflationary. We came out with estimates of break-even payroll, so how many jobs we could be adding without it moving the unemployment rate. 265,000 jobs is what we
So
think
this is critical. You've gone from the old style 150, 170 break even, and you've notched it up 80 or 100,000 jobs because of immigration.
Exactly. And what that means is if you get a one handle on jobs, that could actually be seen as weak. If we could be adding more than that, one handle is something to be watching and worried about.
Paul, this is a sea change over 30 years of American labor
Yeah, absolutely.
analysis.
I mean, so as we see, these migrants come in over the southern border, they're not just sitting around. Where are they going in the economy? Where are we seeing them in the labor market?
So a lot of characteristics we know and we don't know about the new immigrant population. What do we know? They're more likely to be working age, so 25 to 55 years old, and to want to work. So they do have a more positive contribution to the workforce, the labor force, and jobs than the native-born population does. But what's important is matching them to where the job openings are. They're coming in, they tend to be lower skilled, lower education. They largely work in sectors like agriculture, construction, retail, food services. Some of those sectors are hiring, some of them aren't. Agriculture, construction, not quite as much. Food services, leisure and hospitality, yes. But you need to be seeing that those immigrants are being moved or moving to geographies where there are job openings, and still a large chunk of them are in Texas and California.
One of the things I look at on a jobs day is kind of how much people are making. So what do you think? I mean, right now the consensus has average hourly earnings on a year-over-year basis, about 4%. I mean, is that a reasonable number, do you think? How do you think about wages in this country?
Wages are getting a lot of attention because of the hotter ECI print that we got last week. The overall trend are that wages are coming down, but they're still too high. 4% is still an elevated rate for nominal wages. Typically, you want to see that measure get down to about 3% or so.
Well, I would like it higher, the better. I mean, why?
Depends on real wages, right?
Okay.
So when I talk about 3% nominal wages, that's with 2% inflation.
Because I threw this 4% number back at my boss recently, 4 or 5%, and I don't know what happened. It kind of lost in translation.
I said the same thing to Ellen.
Okay.
You talked to her, Tom.
Speaking terms? Very cool.
You put in a good word for me, Tom.
So 4%, is that? So you're saying that's still a little bit too rich for this economy, a little inflationary maybe?
It's still a little inflationary. I think that the trend is moving in the right direction. And actually, we saw Chair Powell kind of discount the hotter ECI print. He did the same thing last November when there was an upside surprise in ECI ahead of that FOMC meeting. He said the overall trend is coming down, so they're not going to read too much into one print. And if you look at the Atlanta Fed wage measures, what we're seeing in average hourly earnings in the non-farm payrolls data, it's all trending in the right direction.
To tie a bow on this, if we get a 3-month moving average of 250,000 non-farm payrolls, you would suggest that's suboptimal?
It's a little bit suboptimal. I mean, the break-even range is 265, so it's pretty close to that. That's kind of the neutral run rate of the economy, and it's nothing to worry about. The more important thing is that it's not an inflationary level of job growth, and it's not a job growth level that starts to worry the Fed that we're seeing a meaningful deterioration. It's okay.
Are we seeing with this immigration employment a potential GDP that comes above 2%, which allows the Fed to get some form of contrived new 2.00%? It's a higher number to go to.
I definitely think near-term potential GDP is probably higher than 2% because of immigration. I mean, we got 3%
give me a
GDP
number.
last year.
I mean, nobody's listening.
Yeah, we have 2.3% as our forecast
John, you
for
get
this
that
year.
2.3%.
And that's with restrictive monetary
that.
policy. So if policy wasn't restrictive, given where immigration is, it's probably even higher than that. So that would be, we have 2.3% as our forecast for this year. That's probably even below potential, what near-term potential is.
All right, it seems like everybody who wants a job probably has one out there. Wages increasing 4%. How's the consumer? How does that translate into the consumer?
That's a great question because we've been getting a lot of mixed earnings on consumer companies the last couple of weeks. What do we think? The consumer is still healthy overall, but there's pockets of weakness. We've been calling for 0% growth in goods consumption this year. So you're going to have an economy that's primarily driven by the services side of spending. And that's exactly what's coming through in the data. Retail sales are weakening. People just don't want to spend on goods anymore. It's a mix of higher interest rates, tighter lending standards, less appetite.
I saw Jerome Powell, and I thought there was a lot of what I put this out on Twitter. I thought there was a huge amount of hopium. And the answer is he did a press conference for domestic final sales at 3%. Not a rounded real GDP of 1.6%. Domestically, is the economy better than we perceive?
The economy is very strong, 3% private final domestic demand, not the 1.6% overall GDP. And we're probably going to see those components that drag down overall GDP swing back up in the second quarter. Consumer spending is slowing, but it's still at a very elevated rate, right? It's about 2.5%. We think that's going to get closer to about 2% run rate throughout the year. But still healthy, mostly being driven by middle, higher income households and services spending.
Now, we had James Lord on this week, just outstanding on foreign exchange. You were at Johns Hopkins, right? Did they inflict Steve Hanke on you? Did you have to go to courses?
I do know Steve Hanke, yeah.
So Sarah Wolf on yen intervention, we're really going to get her in trouble with compliance here. Come on, you were weaned on this at Johns Hopkins.
We are watching FX. We don't think that it's going to have that much of an impact on inflation, but it will come through in the trade data where we'll start to see more strength probably in imports from a stronger dollar. But really what matters right now is the pass-through to inflation. And if you look at everything else going on globally, in particular China, they're still exporting deflation. Those import prices are still looking lower. The pass-through to inflation is still looking promising for the U.S.
I'm going to tear up. She nailed that.
I know.
Professor Hanke is like, oh my God, she nailed that.
Yeah, exactly. So, Sarah, given all that, should we expect the Fed to, I don't know, just kind of follow the data, if nothing else, and maybe, again, we feel like we got a little bit of a dovish comment from the Fed this week.
Yeah, and we think that markets are priced too aggressively, too few on cuts.
Oh, too few on cuts. Okay.
Too aggressively in the other direction.
Gotcha.
We're not extrapolating forward the upside from the first quarter into the rest of the year on inflation. What we're seeing is that the first quarter reacceleration was first driven by core goods, and it wasn't a broad acceleration in core goods. It was three components. It was videotapes. Skyrocketed. Who's buying videotapes?
What?
Very bizarre. Very bizarre. You got to look up videotapes month over month.
Are you using Sony
in
or
addition to the
Betamax?
BlackBerry, I have an extensive video.
You got the Betamax going, right?
Yes, thank you.
We're still measuring videotapes?
Very bizarre, and it just skyrocketed in March. That's got to come back down. Apparel prices were higher. So it was just a few categories. And then financial services, which is just tied to the stock market performance, which we know has rolled over. So that should actually reverse back out in April and May. So we do think that we're going to get quite a bit more downside in the second quarter, and that's underappreciated.
I love your look today, but is apparel prices, is this Dior driven? I'm asking for a friend.
So what we're seeing with apparel is that, they're discounting a bit more. It depends on where the consumer is shopping. But overall, when we talk to our apparel equity analysts, there's no reason to think that apparel prices are going to be sustainably running higher this year.
Maybe more than anything I can think of. How do you aggregate apparel? How do you aggregate some la-di-da on Madison Avenue walking into Dior with somebody going, I got a party Friday and I have no money, and they're going into wherever, Kohl's.
So it's fun. The apparel equity analysts, they do channel checks. So they go to the malls every week and they're counting the amount of discounts that are on all the racks, and they're going to different stores and whatnot.
Zentner used to do that,
I bet. Yeah, she's not sending me to do that.
Zentner was in Filene's basement up in Boston, going through the stuff, looking for bargains. Sarah, thank you so much. Sarah will working with Ellen Zentner. They're at about a 250 on jobs with some really important discussions there. about this new research point, immigration, clearly one of our themes, seriously, through 2024. On Apple CarPlay, on YouTube, search Bloomberg Podcasts. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. I-95 traffic headaches. A bridge in Norwalk, Connecticut is now being demolished after a multi-vehicle crash yesterday. A gas tanker burned for hours. No one was hurt, but the interstate is closed in the area. Governor Ned Lamont.
The bridge was damaged. The heat from the burning fuel compromised some of the bridge, so that bridge is going to have to come down.
Governor Lamont says the section of I-95 could reopen in both directions as soon as Monday morning. Today begins day 11 of testimony in Donald Trump's criminal hush money trial in New York. According to the former president's attorney, Michael Cohen, Trump regretted paying Stormy Daniels $130,000 ahead of the 2016 election. The revelation coming out in court yesterday when prosecutors played a recording of the phone call Cohen secretly made with Stormy Daniels' former lawyer.
I can't even tell you how many times he said to me, I hate the fact that we did it.
Cohen made the payments out of his own pocket, and prosecutors allege that Trump committed crimes when he disguised Cohen's reimbursement in 2017. Donald Trump may be spending most days in a courtroom in Manhattan, but he's still focusing on winning the White House this fall and this weekend, the next step in his campaign. Bloomberg's Amy Morris explains from Washington.
Trump is sharpening his focus on a possible running mate by bringing top contenders for the job to an exclusive donor retreat in Palm Beach this weekend, along with hundreds of deep-pocketed GOP backers. Sources tell Bloomberg the short list includes Ohio Senator J.D. Vance, North Dakota Governor Doug Burgum, Florida Senator Marco Rubio, and South Carolina Senator Tim Scott. Trump's campaign says nobody knows when or who Trump might choose, and Trump has said he'll make his decision closer to the Republican National Convention in July. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
And Michael, thanks so much. Paul, Kentucky Derby tomorrow. Is it still a big deal?
Huge. It's massive. I love the Kentucky Derby. 6:57 p.m. Eastern time is post time for the Derby here. I just think it's great, and the coverage on NBC every year is just fantastic.
Well, I was going to say, is Newmeyer still doing it?
I don't know who's doing it, but you really get to know the horses, the jocks, the owners, their stories, and you really buy in. And then it's the most exciting 2 minutes in sports. As simple as that. So,
fierceness.
Michael Barr will be watching.
Mrs. Barr won last year, right?
She won a couple of years ago, bet a 40-1 long shot.
Wow.
And won. And of course, I've never heard the rest of it.
Yeah,
it was 80-1.
Yeah, she put 1,000 square feet on the back of the abode. That's what she did. Futures up 18. Dow futures up 297. The VIX 14.47. It is Jobs Day at 8:30. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Tech in the driver's seat right now. Apple fanning optimism about the earnings power of big tech companies after the report last night. After the close, they gave a stronger sales forecast. Also predicted iPad and services business going to grow by a rate in the double digits. Cautionary note from Bank of America strategist Mike Harnett this morning. He writes, if the Labor Department's report shows fewer than 125,000 jobs added in April, and the hourly earnings rose more than 0.4% from the previous month, that would be a stagflation risk-off print. We're going to get that at 8:30. Yen outperforming all Asian and group of 10 currencies this week. And what are you laughing about?
Stagflation risk-off print.
There you go.
Did you ever think you'd say that 10 years ago?
Right. Off to Omaha this weekend. Worth noting Berkshire's annual shareholder meeting. By the way, that is, I'll get political here, that is situated in a congressional district that could prove key come the November elections. In the past, Mr. Buffett has made endorsements. He stayed away from that for a while. He leans Democratic. There's speculation he could get back into the game maybe this weekend. Anyway, chew on that. Dow futures 291 points higher. S&P E-mini futures up 17 points. So we check the markets for you all day long, right here on Bloomberg. Tom and Paul.
Thanks so much. Paul Sweeney, what do you make of earnings season so far? I read Julian Emanuel carefully today, Evercore ISI. I'm sorry, it's like one big thumb up again.
It's one big thumb up. I've seen, earnings up about earnings growth about 8 or 9% here in the quarter on slight revenue gains here. So it's probably enough for this market, given where we think the Fed is going to be, which is 1, maybe 2 cuts this year.
You get news you can use. YouTube live chat. I'm loving it. I'm learning things every day. Filene's Basement in Boston closed.
Did it?
I didn't know.
I did not know that either.
It was like you go downstairs. It was like a feeding frenzy. Ellen Zentner would go down there.
That's where Mike Dukakis used to get his suits.
Yeah, Mike used to get his shirts down there. And
Dukakis.
And all that. Yeah, Mike Dukakis. He used to. Bill Weld would never go down there. I saw Bobby Orr down there once.
Did you?
No, I'm kidding. I'm kidding. Anyways, thank you for that note on Filene's Basement.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages, not with Lisa Mateo. It's brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. That's IBKR Desktop. And on a Friday, IBKR, thank you for your commitment to what Paul and I do here each and every day when we're not work from home.
Sure.
We're not like that. John Tucker with the headlines. What do you got, John?
I feel we've given kind of at least I have, short shrift to this story.
I agree. I was just thinking that. I was reading the story,
The most significant antitrust trial in the past quarter century. It's wrapping up in Washington. They did began hearing closing arguments yesterday after the 10-week trial. The DOJ, of course, accusing Google of suppressing search rivals by paying tens of billions of dollars a year for anti-competitive agreements with the wireless carriers, with the browser developers and device manufacturers. And they unsealed some of the court documents this week, so we got to look at what they've been paying Apple. $20 billion in 2022 alone to be the default search engine on iPhone as well as the Safari browser. Google, for its part, argues competition in search had never been more varied or significant.
Yeah, what's the
here's
case?
the bottom. I'm reading the Bloomberg reporting on this. If the Justice Department finds that broken antitrust laws, in theory, they could break up the company. And the last major breakup of a U.S. company was AT&T back in 1984. That's the level we're talking about. I need to get a legal mind on this to say, hey, where's this going to shake out here?
Jennifer Rhee from Bloomberg Intelligence.
What are they doing wrong? That's what I don't get. They pay them so that the search engine's Google, which we all use every day. What are they going to do? Give us Bing?
Let's hope not.
Bing will work on your BlackBerry.
You should have been a witness for the defense.
I should have been a witness. We need Bing next.
Let's do this Washington Post story. This is focusing on Ukrainian men. Now, we heard recently about Russia's use of chemical weapons, but Ukraine desperate for soldiers, according to this report, to reinforce the crumbling defenses. Ukrainian embassies have now temporarily suspended consular services for fighting-age men, so it places new pressure on them to go home to fight. The suspension of citizen services, this is like passport renewals. It's intended as a preliminary step to a new mobilization law that goes into effect May 18th. It does require all men ages 18 to 60 to update their personal information with a local draft office within 60 days.
18 to 60?
Yeah.
Oh, boy.
There is martial law there. It prohibits men ages 18 to 60 from leaving the country. But a lot of men who are afraid of being sent to the front, they already fled. So
yeah,
that's that story.
Okay.
Fascinating read on the Bloomberg this morning about the father and son duo behind Carvana and the drive toward riches. We're talking about Ernie Garcia II and Ernie Garcia III. They've added more than $11 billion in their combined net worth since December of 2022. That's when Carvana stock fell below $4 a share. The company was forced to restructure debt. That was then. This is now. The shares jumping 34% yesterday to the highest in more than 2 years. The company reported, of course, stronger first quarter earnings, revenue topping analyst expectations. That one-day surge pushed the older Garcia's fortune to $10.9 billion. His son's net worth climbed to $3.8 billion.
Guess who's on the board here? A name from the past.
Who?
Dan Quayle.
Oh, wow.
Yeah.
I did not know
They're
that.
not going to do a $100 billion share buyback. Their EBITDA margin is 5 cents on the dollar. And their free cash flow is just now turning positive.
Yeah.
I'll give them that. But
they still have $6 billion in debt.
have you...
I mean, look at the chart.
I'm afraid to ask. John Tucker, have you used Carvana?
Good Lord, no.
This stock peaked, pandemic peak, when you couldn't get a car anywhere. In August of 2021 at $360 a share.
So it's a pandemic
And then
story.
it went down to literally in December of 22 to $5, $360 to $5, and here we are back at $116.
Yeah,
so
Lisa
the volatility
Bramlett's
of this
loaded
name,
the boat on it.
Exactly.
She mortgaged one of the kids.
Let's do this one from Politica.
Please.
A couple more here. All right, so you're an aspiring politician. You're a politician. You want to go even higher. So you write a book and tell everybody how you shot your dog?
Oh, boy.
Go figure. Kristi Noem's Damage Control Tour in full swing appears destined for the same fate as her late dog, Cricket. She, of course, says in her new book she shot bad-behaving Cricket. And then the reason she did this, she thought it would show voters and everybody that she was the type who could make a tough decision like that.
Oh, there you go.
But at Mar-a-Lago, even before the revelation about her dog, Politico says Noem had long ago been cast aside as a likely running mate. That's according to 6 people close
How
to
can
former
you have a
President
VP
Trump.
from a state with 3 electoral votes?
Yep, South
I don't
Dakota.
Get it. I don't get it.
I'm
making the number up.
I'm looking on the bio screen on the Bloomberg terminal for Kristi Lynn Arnold Noem, the governor of South Dakota. Hobbies, hunting.
Oh,
So
yeah,
there
well,
you go.
that's how you get elected out there.
Hunting puppies.
Pheasant
Yeah,
hunting.
Let's finish up real quick with the Journal. Decades ago, if you asked Americans who envisioned a Wall Street commuter, you'd picture a guy like Paul.
Yeah.
Man in a dapper 3-piece suit, reading the paper on the train from Connecticut. But if you visit corporate offices today, you'd be forgiven for thinking the male execs had hiked in from a yoga studio.
Yeah, like Damien Cesar.
Exactly.
Cesar's got it down cold.
He's in the office today.
This is
I
a
saw him.
much memed finance bro uniform, the dressing as if challenging your spouse to remain faithful. So they talked to a couple of personal stylists. They said a lot of men are over-invested in clothes and hybrid tech fabrics that straddle exercise and office attire. So
John Tucker, thank you so much for
just
giving
go to
us the
Brooks
attire.
Brothers.
Yes.
Yeah, Damien Cesar, look. John Tucker, thank you so much. The newspapers as well. This is a great song. You know Nancy and Ann Wilson. The other guy in Heart, Roger Fisher, is just beyond gifted. From a few years ago, they were doing this with Howard the other day.
Yeah.
You know,
Yeah,
it was
Amazon.
large.
Yeah.
And tears Barracuda.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene. Jobs Day in America. Maybe the Bureau of Labor Statistics will give us a share buyback.
Yes.
We can see that at 8:30 in 29 minutes. We're going to get Jobs Day. It's actually really interesting. Sarah Wolf was a real value add this morning. I mean, for Morgan Stanley, she really gave some nuance to their 250,000 number, but everybody's guessing because of the new population growth in America.
Absolutely. I mean, she called that out. They've been doing some work on that, the migration and what it means for the job market.
And we'll have to see on that. Really interesting. Jay Bryson with us in a moment. I mean, I got goosebumps. I got ducky bumps. Jay Bryson, Jurrien Timmer, And then, she's like, Cher. I mean, we don't need to say any. Claudia.
Yep.
Scheduled to join us.
We got it covered.
Claudia, you know who that is. She's been on fire and, of course, really good about we're not in a recession. Bloomberg surveillance on this Jobs Day brought to you by Cohn Resnick Advisory, Assurance Tax, Cohn Resnick's Enterprise Risk Management Solutions. They can help your company drive value through stronger compliance and reporting procedures. Visit CohnResnick.com. We spell it on Jobs Day, CohnReznick, CohnResnick.com. And I ran into Jackie in the food court. Jackie was work from home before work from home was work from home.
Sure.
Ran into Jackie in the food court, and she said, Cohn Resnick, it's a good and beautiful thing. Yep. Thank you, Jackie. Thank you, Cohn Resnick, for your support. With the Bloomberg Business Flash, John Tucker.
All right, Apple, most active in the pre-market. The results giving investors encouragement about the tech story. They also announced the biggest share buyback in U.S. history. The pre-market up 5.4%. Non-farm payrolls, the next big trigger for markets after Jerome Powell effectively laid concerns about a potential rate hike, laid those fears to rest. Let me do Amgen shares soaring. The CEO said he was very encouraged by early results from a study of the company's experimental obesity drug, Maritide. Right now, the S&P E-mini futures, they are up 17 points, a rise of 0.4%. Dow futures up 284. NASDAQ futures up 104. The twos right now, equivalent unchanged, that's 486. The 10-year yield, 455. That's 2 basis points lower. I thought about you when I saw this story. Sam Ash, the music store chain, started closing all its locations. Thank you for allowing us to serve musicians like you for 100 years.
This is sad.
It says on its website.
One of the saddest moments I've had in a decade. I went into the Guitar Center on Sunset Boulevard, which is iconic. I mean, it should be like National Historic Places. And it's gone. Somebody had a really brilliant thing out the other day on one of the stores. I don't want to say who it is. It's just a brutal.
So where do musicians get their instruments these days?
It's all done off incredibly smart digital internet blogs. Reverb. There's a thing called GearSpace, which is just everybody. You get more information off GearSpace than any minimum wage kid in a given music store is ever going to give you. And I bought, true story, I bought a Paul McCartney Cavern Hofner Beatle bass out of a guy encyclopedic on Hofner basses out of his home somewhere outside Detroit. That's what's happened to Sam Ash.
So it's sort of a microcosm of the changes that we're seeing in the economy.
Retail,
retail. It's huge, and I can't remember 42nd Street, 41st Street, can't remember, but Manny's there, and all of them. Just good morning to everybody trying to make it in the music business. You should see Jay Bryson with a musical instrument. Oh yeah, it's unbelievable. Okay. Jay Bryson joins the Wells Fargo. Jay, what instrument was inflicted upon you as a child?
I was inflicted by, or I inflicted other people with my violin playing. Yeah. Well, that was many years ago. I haven't picked up the violin since.
My deepest threat, when David Gura has a free moment, we'll get the Gura Bryson violin concerto. We'll do that as well. Jay Bryson with Wells Fargo. We got a great lineup here. We're going to go international with Jay Bryson right now. Jay, on this Jobs Day, why do we have American exceptionalism? Why do we have a better than good job market versus other nations following austerity?
So, Tom, I guess it's two things. One would be on the demand side. You had got a lot of stimulus back in, a few years ago. That's pretty much done at this point. But that kind of gave you some oomph, in terms of the demand for jobs. Now on the supply for jobs, you mentioned it earlier in talking about migration. We have immigration here. Now, albeit some of it is, illegal immigration, but unlike what's happening in many other countries around the world, the labor supply continues to grow here, and part of it is just natural demographics. Part of it's immigration, but when you look around the rest of the world, particularly with our major trading partners, the other major economies in the world, they just don't have the same sort of labor supply growth that we have here.
So that's kind of where I wanted to go, Jay. I mean, you look at the labor market in the United States. It's just, I mean, it got to be fully employed, right? I mean, I look at 3.8% unemployment. Isn't that by definition kind of fully employed?
Yeah, so if you look at, what most people would say would be like the equilibrium, sort of unemployment rate, or, if you look at where the FOMC is in terms of the summary of economic projections, what they think the long run natural rate of unemployment is, it's 4%, 4.5%, so maybe we're a little bit below that right now. But, in general, any sort of unemployment that you're seeing right now would be what we call structural unemployment. The people don't have the right skills for the jobs. But other than that, the labor market, and we'll see in 20-some minutes, the labor market remains very, very strong.
I talked to Sparty yesterday. That's what he said about me. He says, Tom, you're very structural. You don't have the right skills for this job. Thank you, Sparty.
But you're fully employed. So, Jay, let's say that the numbers come in line with the consensus, 240,000 non-farm payrolls, unemployment stays around 3.8%, wages up, in the 4% kind of range. How do you think our Federal Reserve is going to look at that set of data?
Well, so I would think that the Fed would probably look at it and say, well, that's kind of what we were kind of expecting here. I mean, if it comes in at 40,000, so that's a step down from 300,000 that we printed last month, right? And so it would show that in general, the labor, as Powell would say, the demand and the supply for labor are getting back into better balance. And that's what it would be. I wouldn't think that the market would have a huge reaction to that. It's more or less, on consensus. But again, I think it doesn't change any views at the Fed. It's not like it's going to, the numbers that you described, Paul, it's not going to pull up any sort of easing, nor would it necessarily push back any sort of easing by the Fed. I think they would look at it and say, that's kind of what we expected.
All right, given that background, you're kind of a fully employed America. How does that translate to the consumer? How do you factor the consumer into your GDP forecast?
So at the end of the day, what really matters for the consumer is income growth. We can talk about the stock market, we can talk about house prices, et cetera, consumer confidence, et cetera. What it really boils down to at the end of the day is income growth. Income growth will support continued consumer spending. And so if the labor market continues to hang in here, if it continues to create jobs, it's going to create income. That's going to create consumer spending growth going forward. Now, what we have seen is the real disposable income. So that would be purchasing power. That's, your income after inflation. That has slowed. The growth in that has slowed. It's still positive, but it has slowed somewhat. And so we would expect to see slower growth in consumer spending going forward, but certainly not a massive sort of retrenchment. And that's kind of what you want to see anyway. You want to see an economy that was very, very strong last year, that still has some inflationary impulse behind it. You want to see that kind of slowing down to bring inflation back down.
I got 8 more questions. We're out of time. Jay Bryson, thank you so much, Wells Fargo. The global view there on the jobs report today and the great micro analysis that Wells Fargo does domestically as well. Futures up 18, Dow futures up 24. The VIX, 19, 20 gloom?
Oh, my goodness.
Are we going to pop to a 13 VIX if we get some good numbers here?
14.43, Tom.
14.43. I don't get it. The Sweeney statistic right now, 4.86%, way in from that.
I know.
5.02%.
I know. Yeah, not too bad.
It's the edge of Nirvana. Speaking of Nirvana, with your news from New York City, Michael Buck.
Thank you very much, Tom, Paul, John. The tanker fire on a Connecticut highway turned traffic into a parking lot for motorists like this truck driver.
I'm coming from New Haven, and it got stuck out here for 6 hours so far.
Fortunately, no one was hurt, but Governor Ned Lamont says parts of I-95 linking New England and New York will be closed for days. More from Bloomberg's Charlie Pellet.
The tanker truck was filled with gasoline. It burst into flames in a 3-vehicle crash on I-95 in Norwalk, closing the East Coast's main north-south highway and causing major traffic jams. The crash caused damage to the bridge above it, which the governor said will need to be demolished and replaced. It is reminiscent of last year's deadly accident in Philadelphia along I-95 when a tractor-trailer carrying gasoline lost control and caught fire, destroying a section of the highway. In New York, Charlie Pellet, Bloomberg Radio.
The second week of testimony of Donald Trump's hush money case will wrap up today. Prosecutors have been using testimony about meetings, email exchanges, and business transactions to build on their foundation of their case. Trump's defense is trying to show that Trump was trying to protect his reputation and family, not his campaign. Meanwhile, after repeatedly saying that he would take the stand at his criminal hush money trial, former President Trump now claims that a gag order would prohibit his testimony. Legal experts say that is not true. Criminal defense attorney Arthur Aidala.
For a guy who was the president of the United States and wants to be the president of the United States, for him to confuse a gag order with his right to testify at a trial is troubling, and that's the sweetest way I can say it. Of course, every defendant has the right to testify.
Criminal defense attorney Arthur Aidala. Police have arrested nearly 2,200 people during pro-Palestinian protests at college campuses across the nation in recent weeks. More than 200 of those arrests were at UCLA as law enforcement cleared a pro-Palestinian encampment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. John Tucker bringing up Sam Ash shutting down. Good morning. And this is on, if you say Titus Avenue in guitars from coast to coast, everyone knows that only means House of Guitars.
Oh.
14617 in Rochester, New York. Good morning to Armin and Bruce, who changed everyone's life. It is the greatest guitar store in the world. I'm honored
looking at the website
to go way, way back there. I've bought 4 or 5 guitars from there.
A Gibson
over the
MK53 from 1975, $1,695.
Well, that's,
wow.
There's some of them are a little more than that as well. But good morning to House of Guitars, which is basically, John Tucker, how Sam Ash became. They all tried to mimic the volume of guitars. I mean, every single rock star, they literally played Rochester so Ed Van Halen could go to House of Guitars.
How many guitars do you own?
We don't know that. Also, we know what's very important here is for good morning to Chubb. They insure me. We move the decimal point on the guitar over 1, and sometimes we move it over 2 points as well.
God bless your wife.
The store was started in 1964.
I have been in the basement when they were there. The Stutzmans did acoustic
Bruce
guitars.
And
That's a good
Bruce
year.
and Armin did electric guitars. House of Guitars. Good morning, and good morning to everybody that's ever walked into a Sam Ash as well. Futures up 19. Dow futures up at 290. It is Jobs Day in 15 minutes. We'll go beneath the headline data. Bloomberg surveillance. Good morning.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, and with this Bloomberg Business Flash. Stock futures this morning getting a pop from technology shares, specifically Apple. Apple shares right now the most actively traded in the pre-market, up 6.25%. After the company posted stronger than expected sales, predicted a return to growth in the current period, and also a monster share buyback program being announced. And just a few minutes, a big focus that shift to the jobs report at 8:30. Job growth expected to remain strong. The consensus for non-farm payrolls, 240,000, according to the Economist surveyed by Bloomberg. Remember, the last round, it was 303,000. Just getting results from Hershey, first quarter adjusted earnings per share beating estimates there. You know, you haven't done crude prices. NYMEX crude, 40 cents a barrel higher, 79.35. And the refined product that I put in my tank, it's been an eye-opener lately.
Yep.
Over 360 at the Wawa.
So it's not coming down yet.
No.
As we see West Texas Intermediate come below $80 a barrel.
It's a pop down of a few cents, but nothing significant.
So when you go into the Wawa on Route 36 in Jersey, do you get a coffee too, or do you just fill up with gas?
I've just been filling it with gas.
Okay,
I'm laying off coffee.
Some people love the Wawa
You
coffee.
know, you come in. I mean, he's got the H2, and they're like going. I mean, is he going to top tick $300?
He takes 2 spaces in the
He
garage.
does. You know. John Tucker, thank you so much. We begin now commercial free for at least the next half hour. We'll see how it goes.
Boo.
What a lineup. Claudia will be with us. Claudia Sahm. Jurrien Timmer will be with us.
Solid.
And we start strong with Eric Winograd with Alliance Bernstein. And I can't tell you the shoes he had to work with and Phil, Joe Carson, and all at Alliance Bernstein. Eric Winograd, just simply now, does the Fed care about the labor economy, or are they completely fixated on inflation dynamics?
Good morning. Thanks for having me. It's an interesting question, and I think Powell told us that they do care about the labor market, but only in one direction. There's an asymmetry here in that if the labor market weakens, they're willing to cut rates even if inflation doesn't start behaving better. But if the labor market stays strong, that isn't going to push them into rate hikes or anything like that. So it really is sort of an asymmetric bet or way that they're looking at it right now, which is unusual.
Paul, we're going down in flames. I mean, we're focused on the jobs report here in 11 minutes, and they're out on YouTube, live chat, talking about Carvana.
Carvana,
I mean, we're missing
the boat.
We're going to stay on jobs.
Hey, Eric, so what are you going to be looking for in this in this jobs data today? We're going to get a lot of data about the jobs, about wages, about unemployment. What's important to you?
Yeah, I think the wage numbers are important. You know, the story that we've been telling around the labor market that I think the data generally support is that there's a very gradual cooling of labor demand, and wage growth has slowed in year-over-year terms. If that continues, then that tells us that the story is still in train, right? The rate of hiring, the pace of hiring goes up and it goes down month by month. But if we can look at wages and see that they are not accelerating, that they're continuing to slow, that's consistent with the gradual sort of slowdown that we expect and that the Fed expects. And honestly, look, wages are pretty handily beating inflation right now, so there's room for them to slow without upending the economy. And I think that would be a good sign.
Eric, is there a level of unemployment, again, the consensus is 3.8% this period, where the Fed would say, okay, this is a trigger for us, we can start cutting rates? Is it 4%? Is there a level that you think the Fed is looking at?
You know, it's a trajectory as much as it's a level, right? If the unemployment rate were to go up by 3 or 4 tenths over the course of a few months, that would absolutely get their attention. And that's sort of what I mean about the asymmetry here, right? If we saw that happen, irrespective of what's going on with inflation, they've told us that they would open the door to cuts. With any data point, you know, anything can happen in 1 month. So if it popped up in 1 month and back the next, that isn't going to do it. It's not like if we go to 4% this month, they're going to cut rates right away. But if it steadily marches higher, that'll get their attention.
Eric, to your international work, and particularly at Dartmouth, you know, I got to ask this. Is this a jobs report about the domestic economy, or does our labor dynamics bounce off net exports, which showed a pretty moldy economy, except domestic final sales were actually pretty good? Does net exports matter in our study of the job economy?
Not really. The truth is that the U.S. economy is very closed by global standards. What that means is that imports and exports are a very small percentage of what we do. So, of course, it matters to a degree, but this is really a very self-sustaining domestic-based economy. And so the parts that drive employment really are much more domestic focused. This is the 2/3 of GDP, a little bit more, is domestic consumption. That's what moves the needle here.
Eric, I want to get one more question in here. So we've got a jobs report today, and then we pile on to CPI reports and all the other data that's out there. How will this be market moving in 7 minutes? Is it about a lower non-farm payrolls, or do we get a bigger market move, an asymmetric move with a larger non-farm payrolls?
So look, you can always have an outlier number that'll move the market in either direction. Let's leave that aside and say within sort of your reasonable realm of expectations, I think a softer number probably moves the market more because, as I said, the Fed has told us that a softening labor market could get them to cut rates sooner. Whereas a firmer one, look, the Fed's already not expected to raise rates. They're already not expected to cut rates till the end of the year. You're not going to mess with top pricing too much. So again, barring some sort of multiple standard deviation move, some slight softening I think would be positive for the market and is more likely to be market moving because you could pull forward rate cuts a little bit.
Eric, thank you for setting us perfectly. Really, really appreciate that. For all of you worldwide and across the nation, Paul Sweeney and Tom Keene, the jobs report. We'll go to that here in 7 minutes. We welcome all of you on Apple CarPlay, Android Play across this nation. Yes, on Bloomberg Radio. Good morning, Bloomberg Radio 1130, Knicks Nation.
Oh, boy.
Got that in.
Yep.
Good morning on YouTube. Just humbled by the response. Bloomberg Podcast. What part of YouTube are we on? What's the way to get to us? You go to Bloomberg Podcasts. Out on YouTube, there's a live chat. It's on fire this morning. Lots of guitar. Robert called. He bought a trombone. It's Sam Ash. Thank you, Robert, for that knowledge. It's good to know as well. Why don't you bring in? Do we have Jurrien yet?
Yeah, absolutely.
We've got Jurrien Timmer. Why don't you bring in Jurrien Timmer, the best chartist in the world?
Jurrien Timmer. He is the director of global macro at a little shop up in Boston we call Fidelity Investments. Jurrien, thanks so much for joining us here. We've had a busy day and a busy week in terms of economic data. We've had a lot of earnings data this week. As you sit back and you're going to parse this labor data that we're going to get in just a few moments, how's your mosaic here, your view of these markets here, given all the economic data, given all the earnings data we've had?
Well, good morning to you both. Yes, it is always a mosaic, of course, and a year ago, we were completely fixated on, when is the Fed going to stop tightening? When is it going to start cutting? By how much? When? Because that was a time when there was no earnings growth. Earnings were contracting very modestly, albeit, but they were contracting. And if you plug in earnings and interest rates into a discounted cash flow model, when interest rates move, it matters because it lowers the present value of future cash flows. But those future cash flows matter more. And so the good news for this year, and why I think that the cyclical bull market is not over yet, is that earnings are growing. Started with the fourth quarter earnings season. That was a really good, solid one. This one is another solid one, 80% beating by 9 percentage points or so. That's fairly, typical. Companies generally beat. But the earnings momentum is there, and that takes the pressure off the Fed to immediately give the market those rate cuts that, it craved just 6 months ago. And the Fed is not that restrictive. It's restrictive. If inflation's 3.5, if that's where we're settling in for now, and a real rate of 1%, you're looking at 4.5 as the neutral rate. The Fed's at 5 3/8. Most versions of the Taylor rule that I track are between 5 and 6. So Fed's where it should be, and the market is not overly dependent on rate cuts here, I don't think.
Jurrien, I've got 18 questions on your fabulous market charts, but it's jobs day and we're 5 minutes away. On the Taylor rule, and we're not going to go into pi and 1 minus pi and asterisk and all that, but Jurrien, how do you amend the American labor economy into a Taylor rule exercise?
Well, so the Taylor rule, as originally developed by, of course, the Fed economist John Taylor, just says, there's a natural rate. You add a factor for inflation and a factor for growth. And if inflation is running above the Fed's target, then you kind of you take a mark off there. And if the output gap is negative, then you have an easing bias. If it's positive, you have a tightening bias. And so to your question, we look at the unemployment rate, and we look at what is the Fed, at least, or the economists consider to be the full employment, the formerly NAIRU, right, the non-accelerating inflation rate of unemployment, and there's a small gap. It's getting smaller because the unemployment rate has gone up a little bit, and the inflation gap's getting smaller because inflation has been coming down. It's just not coming down to the levels that the Fed would like to see, and so most of the models that I follow are 5 to 6 and coming down. So that does allow the Fed to ease, but it's just a question of when and by how much.
What earnings number are you speaking to Will Danoff about? Are you telling him high single digits earnings?
Right now, the forward estimate is growing by 12% per year.
Wow.
The consensus estimate for 2024, so that's the calendar year number, is holding very steady at 9%. Our analysts are constructive. Our earnings numbers are pretty robust, and so we like earnings here.
I want Paul to get one question in here before 830. Paul, what he just said there is the single biggest miss of what we do every day.
People
double-digit
underestimating
revenue growth.
Yep.
Earnings.
Gina Martin has been calling that out over the last several weeks. Will, I guess, Jurrien, we had that 6%, 5%, 6% drawdown in the market just several days ago. Is that it?
Well, we don't know in real time, of course, but it's worth remembering that the market goes up 60, 70% of the time, which means it goes down 30 to 40% of the time. And since 1900, if you look at daily data, the market has been in a state of a 5% or more drawdown 65% of the time. So more often than not, the market is down at least 5% from a high. And that's the volatility price that we pay for those outsized returns if we hold in long enough. And that's the duality of being a stock market investor, right? You get those returns, but you have to endure some volatility along the way. And it's another thing worth remembering is that from October 27th of last year, when the 10-year yield went to 5%, and the market was down 10% basically for that reason. Since that time until the end of March, when we made the last all-time high, S&P ran 28% in a straight line, and the S&P 500 equal weighted ran 27% in a straight line. Those are really big returns, and it's very normal to see the market kind of trade around here.
Jurrien, stay with us. We're going to get your view on a little bit of a jobs report here in 1 minute. Jurrien Timmer with Fidelity. Claudia Sahm will be with us here later on with New Century Advisors, looking 8:45-ish. Dr. Sahm and Mark Zandi will be with us here just in moments after this jobs report. It is simple as this: 240,000 change in non-farm payrolls. Sarah Wolf goes higher, just fractionally, 250,000. The revision, 303,000 was the previous statistic, so we're moving 303,000 down to 240,000. The unemployment rate stasis, 3.8%. Hourly earnings, I still look year over year. Mark Zandi says I'm wrong. I look at 4% as a survey number, and year over year. Paul looks at month over month because that's a cool thing to do, 0.3%. And then lots of other data following on from there, including the labor participation rate. We welcome all of you on Apple CarPlay, Android Play, on YouTube right now to this jobs report on America, the 2 monthly studies. And here it is with futures up 16. Get the numbers out right now.
Ooh. Yeah. A little bit of a miss there, Tom.
The unemployment rate, 3.9%. A tick up in the unemployment rate. Non-farm payrolls come in a little light, 175,000. We'll wait for the revisions. That's an important statistic. The market simply launches off this labor report, including average hourly earnings a little lighter than expected. There's a revision, Paul, in as well, up from 303 to 315. We'll play that in. I'm going to say it's a little ebb here in the job spirit of America. obviously folding into Fed action with futures exploding up 1%, up 56, and the NASDAQ up 1.4%. The Sweeney yield, Paul, it comes in 15 basis points, 4.72%. Your price up, yield down on your major investment there.
Exactly right. Price up, yield down. The headlines, change in non-farm payroll came in at 175,000. Consensus was 240,000. The unemployment rate came in higher at 3.9%. The consensus was 3.8%. And the average hourly earnings on a year-over-year basis came in at 3.9%. The consensus was 4%, Tom.
We join you worldwide. We are commercial-free for the rest of the hour to 9 a.m. We thank Cohn Resnick, Interactive Brokers, and others for allowing us that. And, of course, at this point with Commonwealth Investments, we thank them for their work on our economic indicators. Commonwealth, they support more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Jurrien, I believe it's a bull market off this jobs report. Does this reaffirm your enthusiasm for stocks?
Yes, this is a report in line with the soft landing thesis, or it's kind of a Goldilocks report. 3.9 U3 rate, of course, gets us another step closer to, as we were discussing the Taylor rule, to minimizing that gap between, the actual unemployment rate and full employment. And so that, it's one little step in the right direction for the Fed to say, okay, we're at 5 3/8. Maybe we can start giving back a couple of rate cuts. I don't think it's going to be more than a couple, but this report points in that direction, and it is not weak enough to really question whether the economic expansion remains in place.
The lift to the equity market with a VIX 13.86. Again, commercial free for you for the hour. Jurrien Timmer, thank you so much from Fidelity. Greatly appreciate that. In perfect timing. I get goosebumps. Our bookers are just killing it.
Exactly.
I mean, they called up Mark Zandi and they begged.
Brilliant.
Here's the book, Paying the Price, Ending the Great Recession and Beginning a New American Century. We're looking for the new volume of this. Mark Zandi joins us now from Moody Analytics. Mark, with the resiliency of this economy, with what we saw from Apple yesterday, I guess we get a Jerome Powell-friendly jobs report. Is it a new American century?
I need to write another book, Tom, but thank you for plugging the book. That's probably you can buy for 5 cents on eBay, but appreciate that. Yeah, I need to write another book, but yeah, it feels like the American century to me, doesn't it? I mean, the U.S. economy is, what's the word? It's rip-roaring.
Well, let me go there, Mark. Dr. Zandi, let me go there. You and I studied at the altar of Ed Yardeni. He says it's like the roaring 20s off the pandemic of 1919. Is it the roaring 20s for Mark Zandi?
Well, roaring that kind of ended badly, didn't it?
Yeah, it did.
No, I don't think that at all. I think the American economy is on very solid ground. It feels really, very good to me. This report, feels like soft landing written all over it. It should allow the Fed to begin easing interest rates. And, I've been reluctant to declare victory saying a soft landing until the Fed starts cutting interest rates. I think that would be premature. But, a report like this, you get a couple of good inflation numbers, and they start cutting, I think we can declare victory. We soft landed.
10-year yield in 12 basis points. We're declaring victories for open houses this weekend for the real estate business. Mark Zandi, 2008, 2009, he was the committed optimist. We will come out of that horrific Great Recession.
Exactly. Tom, I'm just looking at the top live reporting and Enda Curran from Global Economy Reporter saying, this is important for the inflation debate. Average hourly earnings for all employees on private non-farm payrolls rose 0.2% versus the consensus of 0.3. I think the whisper number is probably a little bit higher than that. So that's kind of a key data point that the folks at Bloomberg News are focusing on. And Mark, I'm looking at, again, the 2-year Treasury, the one most sensitive to kind of the maybe rate changes in the Fed, off 13 basis points. Is that the market telling us that, yeah, probably this Fed cut is back on the table?
Yeah, indeed. I mean, it's not premature to conclude that way. I mean, at the end of the day, we got to get those inflation numbers that the Fed's looking for, something close to their target. and they need more than a month, probably a couple 3 months. But this is really consistent with that kind of forecast. So feels really, really good all the way around. And I do think we're going to get better inflation numbers. I do think what we saw in the start of the year was residual effects of the pandemic, some measurement issues. I really think inflation's coming in.
Futures up 60, Dow futures up 512, 1.3%. Wow. The Apple NASDAQ lifts 1.6% as Dr. Zandi says a wow statistic. Paul, here's a number with the revisions. Thank you to Enda Curran and all. And it's Scott Landman running our economic data now. I teared up when I saw that. How about this? 175 take away 22, and I think that's a 153,000 with revision, and that's way below what Sarah Wolf was saying was the run rate for America.
And Richard Flynn, managing director at Charles Schwab UK, says the report is a sign that demand is slowing in the labor market. So, Mark, I'm looking at, I guess the unemployment rate came in a tick higher here at 3.9%. Is there a number out there, do you think, where the Federal Reserve, whether it's 4%, 4.5%, will say, boy, we got to just jump in and start easing right now? Is there a number you think that gets them a little uncomfortable?
I think anything over 4. My sense is full employment, unemployment is south of 4. I mean, that we got there back before the pandemic with no wage growth, no inflation. We got back there this go around. Wage growth has been decelerating, consistent with, an economy that's at full employment. So anything over 4, and it's also not only the level, but the change in. I heard you had Claudia Sahm coming on later. That's, of course, something that she focused on.
Yeah, she didn't want to come on. She wants to listen to you first. Continue.
Oh, is that right?
Yeah.
Well, give her my best. She's great. And, of course, if you get these if you get increases in unemployment of more than a few tenths of a percent in a short period of time, then that kind of signals historically that you're getting into kind of a self-reinforcing negative cycle. So I think anything north of 4 anytime soon, I think that would start to say, hey, my view is the Fed should have been easing even before all of this. I think they achieved their mandate. I think they got the economy at full employment, and I think underlying inflation is at target. Exclude owner's equivalent rate, go to harmonized inflation, you are at target, and they're taking a chance here with keeping rates up. So I think that it won't take a whole lot for them to start cutting rates.
Headline from Bloomberg. Thanks, Rich, for this. Traders pull forward first Fed rate cut to September from November. Zandi thinking they should have done that in September of 2023. Mark Zandi, you drank the Kool-Aid at Pennsylvania. We just came off Apple with a 110 billion share buyback. Yeah. Can you aggregate the American labor economy? Or are we so polarized between the madness of tech success, American exceptionalism, and half of America, as you've studied for years at Moody's, flat on their back?
Yeah, it's a great point. These are great times for the folks in the top third of the income distribution. I mean, I don't know if this is hyperbole, but it feels like it's about as good a time as it's ever been. Maybe that is the roaring 20s. Middle third, it's okay. It's times have been better, but they've been worse. It's more typical. Folks in the bottom third of the distribution, obviously very tough time. That inflation that we suffered back in 21, 22, early 23 really did a lot of damage. They had to turn to credit cards and consumer finance loans, and now they're paying a lot of interest on that with the high rates that the Fed's engineering here. So those folks are really struggling. Now, the American economy can move forward without the bottom third, but it can't flourish. So, yeah, that's a problem. That's a big deal. And one of our key vulnerabilities.
With us, Mark Zandi of Moody's Analytics scheduled Claudia Sahm. She said she wouldn't come on until she got a brief from Dr. Zandi. Claudia's waiting to come on as well. Paul Sweeney and Tom Keene with futures up 58, Dow futures up around 500, NASDAQ up 1.62%. Yields plunged. There's no other word to use. A 2-year yield down 12 basis points from 503 days ago to 4.75%. We thank our sponsors. We are commercial free until 9 a.m. Paul?
So, Mark, let's step back here and kind of put into your economic model what we've seen from the labor market today, what we've seen from inflation data over the past couple of months. What's the growth outlook for you guys at Moody's here for this economy for the remainder of this year?
Good. If GDP is our benchmark, it was up 2.5% last year, which, pretty incredible, thinking that most economists, a lot of CEOs thought we would have a recession last year. Not only was it no recession, it was a great year, 2.5%. It's going to be at least 2.5% this year. So very, very solid growth. It feels like job growth is slowing. It's going to moderate, but that goes to improving productivity growth. And most fundamentally, what's really encouraging is we're getting these, after suffering these massive negative supply shocks, the pandemic and the Russian war in Ukraine, we're now benefiting from some real substantive positive supply shocks.
Right.
The productivity improvement and foreign immigration, although that poses a boatload of challenges, the benefit of that is it creates a lot of folks in the workforce and they're taking jobs and pulling off the labor market.
Mark, I'm assuming you studied under Lawrence Summers' father at Pennsylvania.
Yeah, and his mom.
Yeah,
his mom.
and had that honor as well. Larry's carrying the torch of stagflation. Powell threw Summers under the bus at the press conference. There is no stag, there is no inflation. And that sounds like Mark Zandi. Mark Zandi, is there stag, is there inflation?
I mean, just the opposite, right? The solid growth and moderating inflation. And as I said earlier, I think inflation's already back to target. I mean, go look at harmonized CPI. The way the Europeans measure it, they don't put in owner's equivalent rate because we can't measure that even in the best of times. Certainly now when the housing market's upside down and all around. So if you really want to get to underlying inflation, take a look at harmonized CPI. The BLS produces it. It's an experimental measure. It's been below 2% for more than, 9 months. Right. We're there. So stagflation is just the opposite. We're getting good solid growth with moderating inflation. So this pessimism that I hear from Larry, I just don't get it.
We're harmonized right now. We are thrilled to have joining us with Mark Zandi. Claudia Sahm joins us right now. Her impact on economics in the last 18 months has been extraordinary. She's chief economist at New Century Advisors. We wanted to get you on together. Claudia, I hate to say this, but Dr. Zandi was saying nice things about you. Mark Zandi, a question for Claudia Sahm, please.
Well, Claudia, were you able to hear what I was saying earlier? I mean, agree, disagree, push back? What do you think?
So I heard the last part about no stagflation. I wholeheartedly agree with that. And I think you could put me on just loop about how I think Larry Summers has been too pessimistic through this whole cycle. So, no, this was really the first data point we've gotten this year that says, hey, we could get that soft landing. Which is
Can I ask one more question, Tom?
Please. Oh, no, Dr. Zandi, please take over the show and ask a question. Here, Zandi of Moody's.
I think the low on unemployment, correct me if I'm wrong, Claudia, I know you look at it really carefully, it's like 3.4 not too long ago, maybe 6-9 months ago. We're at 3.9. Your rule of thumb, your heuristic would say we should be nervous about recession here in the not too distant future. Do I have that right? And what would it take for your alarm bells to go off that unemployment's rising too high, too fast?
Anytime we see the unemployment rate rise, we should keep an eye on it. That's not a good thing. Now, I look at, and this is for the unemployment rate and in general, I look at the 3-month averages. And so the low that we saw last year was 3.5% of that 3-month average. And today we're on average at 3.8%. So 0.3 percentage point rise. Sometimes that comes into a recession, but it is not a reliable indicator that we are in one. That reliable indicator would be a 0.5 percentage point. So it's, like I said, we should always pay attention to rise in the unemployment rate, and yet there are not alarm bells here.
Let me bring in my colleague, Paul Sweeney. He's just sold out of his 2-year yield with a gain price up, yield down. Paul, to Dr. Zandi and Claudia Sahm.
Claudia, I'm wondering if you're in the camp that thinks, this Federal Reserve is already behind the times here, that they should have already been cutting here, that inflation has been whipped. Are you in that camp or no?
I saw the case, I think, by the end of last year that we should be cutting interest rates. They're a good bit in the restrictive territory, and if you want to be out of the way when you get to the dual mandate, I'd rather they do that in a gradual way as opposed to having to cut massively if a recession happens. And yet, this is a tough one. I get it. I thought Jay Powell really threaded the needle this week and pushed back on we're going to need to hike. Things are accelerating with inflation. And I think that narrative needed to get
Right.
set aside. So I like in the range of
Right.
things that I could imagine the Fed doing, they're doing a good job.
I mean, the heritage here we've got, folks, with Claudia Sahm, Michigan Economics, and Mark Zandi out of Pennsylvania. It's really, really quite special. Mark Zandi, with that said, and let's say the Fed has a fan distribution of becoming measured, do you assume they revert back to a Greenspanian measured quarter point torture of lower rates? Or can they be more Burnsian-like and actually get something done in a Claudia Sahm way?
Well, I think that depends on the economy and inflation, right, Tom? I mean, if the economy kind of throttles back, stays close to, its potential growth, then I think it's a quarter point at a time. I think the thing that's complicating things for them this go around more than in other times is what is that neutral rate, the so-called R star, that rate which is consistent with policy, neither supporting or restraining growth. We came into this period thinking 2.5%. That's kind of sort of what the Fed's got penciled in their summary of economic projections. But it's not 2.5, right? It's not 5.5 where the funds rate is now, but it's not 2.5. It's higher than that. It's not, so it's unclear where that is. Very unclear. Atypically unclear. And so given that, I think that would call for more caution in lowering interest rates. Lower it a little bit, a quarter point, a quarter, take a look around, see what's going on. And I think that's the way it goes. But if something breaks, in the financial system, in the economy, or whatever, the labor market, was kind of softish coming into this report.
Right.
And if you look at the JOLTS numbers, I'm sure you roll over them when they came out earlier in the week on hiring rates and quit rates. The only thing that's keeping the labor market kind of together is layoffs are so low, but that can change very rapidly. Business psychology can shift. And you start seeing some layoffs, then they'll start cutting more quickly. But I think barring that kind of a scenario, it's going to be, as you said, Greenspanian. I think that would be the way to
Okay,
describe
and Paul, what's important here is this goes to what we learned the day at the Fed Decide show. When it goes rapidly.
Yeah.
That was a clear message from our many good guests.
Claudia, given this labor backdrop, the update we received today, what's your view of this U.S. consumer here? Mark, was suggesting that there are some folks that are, obviously doing well in this economy, but a lot of folks that aren't, that are getting left behind. What does the labor data tell you today?
The labor data is very much consistent with the rebalancing, the moderation. We've seen some big gains in the past that just frankly weren't sustainable. I mean, it would have been great if they were sustainable, but we are, if you look at kind of the 3-month pace, with the payrolls that we got, about 180, which is pretty close to where we were running before the pandemic those years. And that was a really good expansion. So we're at a solid place. Absolutely, always there are people left behind in the United States. Like, that's a whole other conversation. And yet we do still see the consumer out there buying. They're not happy campers with what they're having to pay. And yet, inflation adjusted, you keep seeing the consumers. Now, if we lose the labor market, like if we go past moderation into something that's really weak, we are going to lose the consumers, and then we're lost.
I want to wrap this up in the next 3 or 4 minutes with a good response from both Dr. Zandi and Dr. Sahm. Here on Jobs Day, again across America, futures up 58, Dow futures up 500, yields lower yields, price up. Mark Zandi, let me go to you first. You mentioned the harmonized CPI, which Jason Furman, I believe, talks up as well at Harvard. We're going to have a CPI report come out. Do those numbers? Is inflation countable anymore? Or is Jerome Powell, Mark Zandi, and John Tucker, are we flying blind when we look at inflation, how to measure it?
Well, month to month, it's hard to put a lot of stock in the numbers. I mean, because they're up and down and all around like any economic data, they zig and they zag, and there's all kinds of measurement issues. And, especially in this environment, in this period, because we're post-pandemic and seasonal adjustments very hard. We got residual effects of the pandemic. But, the broader trends, I think we've got a pretty good growth. I mean, just take a chart, it's the CPI or the core consumer expenditure inflator for the last, 10 years. You can clearly see, what's going on. Pre-pandemic, we were suboptimal, inflation too low. The pandemic, then we had the Russian war, and we were high inflation. Now we're coming in. We're not quite back to target. We're pretty close. That general kind of trajectory path, that's reality. feel pretty good about that.
Claudia, you were at Michigan, where they basically invented the study of inflation, the modern study as well. Which inflation series, rather, do you use, Dr. Sahm?
I think at this point, I got to look at CPI like everybody else. Now, I will say, I think it is very important to go into the guts of the CPI. The Fed does that too. They look at every shred of data in there, and there are very unusual factors in this cycle that all go back to COVID, and I can still see echoes of COVID in there. So I think that's an important piece. But honestly, the CPI the Fed wants is the July one, the September one. Like, we are just not good at forecasting CPI, and so the best we can do is really look under the hood and sift through all the details and see what's in there.
Paul, jump in here with one more.
Absolutely. So, Mark, Zandi, I guess one of the thoughts here is just kind of, how do you think our good friends at the Federal Reserve are kind of taking in all this data here?
Could you see Zandi as president of the Philadelphia Fed?
Oh, absolutely.
I mean,
no problem.
It seems like a natural.
It's a pay cut, but
Tom, I'm very happy at my job. I got the best job on the planet.
I'm just working on it.
Literally the best job on the planet. Yeah.
All right, so Mark, how do you think our good friends at the Fed are kind of digesting this morning's data?
Oh, I'm sure they're enjoying their coffee and cereal and Eggs Benedict. This has got to feel really good. I mean, it's, the economy is moving in the right direction. They just need a little cooperation with the inflation numbers, and they'll get. I forecast lots of stuff, and some of the stuff I'm confident in. Some forecasts I'm not. I am quite confident that inflation's coming in. We'll be back within spitting distance of the target here in the not too distant future. Maybe on a year-over-year basis, maybe it'll take this time next year, but I don't think they need to do that before they start cutting
Guys,
rates.
take a memo. This really worked. Claudia Sahm, thank you so much for joining us today with Mark Zandi, Claudia Sahm with New Century, Dr. Zandi with Moody's Analytic, of course, and we look forward to seeing him at the Federal Reserve Bank of Philadelphia at any time. That was great.
Cheesesteak.
And we welcome all of you here. I left like a minute early here because, Paul, we got to look at the markets.
Wow.
And John Tucker, frankly, nailed it earlier. You got disinflation. I got West Texas, 79.13. Commodity prices are coming down. Gold's down $100, maybe more from where it was a couple weeks ago. Bitcoin's down $10,000 from where it was. Equities are lifted up here. I'm sorry. I mean, what does the gloom crew do on a Friday?
I don't know. Again, we had that 5% kind of pullback in the S&P 500, and Jurrien Timmer says, hey, that stuff happens. And here we are bidding higher yesterday, bidding higher here this morning in futures with the S&P up 1%. You'll note the NASDAQ, again, up about 1.5%. And, Tom, I'll put you back on that 40,000 watch for the Dow Jones Industrials, 38,900.
Oh, listen to you. I haven't even thought of that. You're right. Yes.
Yeah, why not?
We're there with the VIX 13.80. Commercial free in this hour, and we think people like Build America Mutual. They insure U.S. municipal bonds that finance essential American infrastructure and provide guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds. And somebody said earlier, Paul, I'm sorry, we got an infrastructure spend going on. Infrastructure is also in, but it's actually happening. We're not seeing it,
Tom, go outside the Lincoln Tunnel on New Jersey Transit. I have never seen a bigger construction project, that includes the big dig in Boston, Tom, go up quicker than what I'm seeing with this new rail line and for the tunnel and all this kind of stuff for the Gateway project.
That's Portal
unbelievable.
North. It looks like it's already done.
It looks like it's done. And there are got to be 1,000 people out there swarming all day.
We go to our surveillance tunnel correspondent, John Tucker. Are you going to be the first one through the tunnel?
Paul is referring to the along the spur of the turnpike as you look left when you're going south. Crane after crane after crane. And finally, we're going to replace the Portal Drawbridge, which is like parts of it are wood, and spans the Hackensack River and gets stuck constantly.
The trains go over and they sink 3 inches.
Oh, it's just,
whatever.
but I can't wait.
Paul, you've been way out front of this. Paul folks has a life. He travels way more than I do. And Paul, you have said you get outside some of the, the gloom of the cities, the depth of the cities. And I'm sorry, there's a vibrancy out there that we see today in this report and the idea of where interest rates set.
Yeah, I mean, and as Mark Zandi was suggesting, I mean, he thinks he's going to, we'll see inflation continue to come in after that. We had like 3 or 4 months or 2 or 3 months of some hotter than expected inflation data. He expects it to come in. Again, we get the labor data today, a little bit of a slowing in the growth of the labor market and earnings.
This is great. Maybe we'll do that every jobs day. Claudia Sahm, Mark Zandi, that worked out. We thank you for being with us. We're going to continue another hour of Bloomberg surveillance and on to the Paul Sweeney Show at 10 a.m. I picked this song. I just said, we need some Chris Whitley. Chris Whitley from the early 90s.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. America sees a more tepid jobs report. Rates move mightily. Two-year yield from a 5.03 down to 4.77%. Sweeney house hunting this weekend as a 10-year yield comes into a really, really stunning 4.49%. Could the mortgage get under 7%?
I hope
Bank
so.
rate 30?
I'm sitting there smart at 6%.
We'll have to see. Bloomberg Surveillance on this Jobs Day. We're brought to you by BNY Mellon. Insight, let me spell it for you, INSITE, BNY Mellon Insight, June 4th to June 6th in Nashville. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com, INSITE.bnymellon.com. With a Bloomberg Business Flash Big Data Report, John Tucker.
All right, you heard Jurrien Timmer at Fidelity call it a Goldilocks report, and the Fed will now be giving back, he says, maybe 2 rate cuts. September, now the betting from investors, economy adding fewer jobs than expected, hourly earnings also lower than expected, and it's risk on. We have Dow futures right now up 492 points, a rise of 1.3%. We also have the S&P E-mini futures of 58 points. That's a rise of 1.2%. NASDAQ futures 282 points higher, a rise of 1.6%. The 2-year yield 10 basis points lower. That's at 4.76. 10-year yield 9 basis points lower, and that is at 4.48. As Dr. Zandi said, spitting distance of the Fed's inflation target. And we check the markets for you all day long right here on Bloomberg. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Paul, quickly here, your thoughts here. 30 seconds away here from the Department of Labor. What are your thoughts here?
It's a slowing labor market. It's still a strong labor market, but it's slowing. And if you're the Federal Reserve, that sets you up for maybe being a little bit dovish.
And what I find extraordinary here is, it was a couple days ago, in the blur of this, folks, trust me, it's a blur. I don't even know Paul's name half the time. But in the blur of this, Paul, somebody said there's record cash out there.
Yep.
What does all that cash do after this report?
I guess buy back stock. If you're Apple, you buy back stock. Why not?
Maybe, but what does retail do? What do individuals do as well? Right now, our Anne-Marie Horton with the acting Secretary of Labor. Here's Anne-Marie.
Is Acting U.S. Labor Secretary Julie Su. Acting Labor Secretary Su, thank you so much for your time this morning. We've heard from the reports. The Fed would seem to be happy with this kind of jobs report. The market is certainly happy. It's this Goldilocks, potentially softening to have a landing of this economy, to a soft landing. What we're seeing right now with this softer report, and the market's certainly taking it in stride. Is that the consensus as well in the read from the Biden administration?
Yes, that's exactly right. This is another strong jobs report, and these numbers just keep showing us month after month that President Biden's economic strategy is working. It's everything you said. It continues to be strong, stable growth, sustainable growth as well. The unemployment rate is still under 4%. That's the 27-month straight that is the case. And the prime age labor force participation rate remains strong. It ticked up a little bit. And for women, it's the highest it has been since this number's been recorded, which was begun in 1948. So this is a strong jobs report that continues to be indicative of a very strong economy.
Well, this is what we heard from Chair Powell earlier this week. Quote, strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and the continued strong pace of immigration. How much do you see immigration playing into the supply side of this labor market?
It's all part of the story. Immigrant workers have, throughout our nation's history, helped to power our economic strength. At the same time, what these numbers show is that the jobs for native-born workers remains very, very strong as well. So when you have such sustained job growth, there is really, it's beneficial for everybody.
Well, we do have a lot of immigration. The CBO, of course, looks at 2023 when they thought maybe it was going to be 1 million. Immigration actually at 3.3 million. But how do you match that supply to demand, especially if these are a lot of undocumented workers? How do we match the supply of potentially, are they going to the right jobs and the demand the U.S. labor market actually needs?
I mean, this is something that the Department of Labor is laser focused on every day, is making sure that we are connecting people to the good jobs that they want and need, especially in this moment of such historic job growth, not happening just by accident. It's happening because of the resilience of the American people, because of the small business boom that we're seeing, because of working people. You know, the president says all the time, it's the middle class that built America. Unions built the middle class because of strong growth for unions. And it's also happening because we are seeing people coming into the labor market. And so this is a moment where we have to be able to connect people to those jobs and employers to the people that they need. And that's why our workforce development system is so important, and why when I travel the country and I see training programs that are bursting at the seams, it's another indication that this economy is moving in the right direction and that Bidenomics is having a positive effect in communities all across America.
The survey response rate, though, for this report was 54.9%, the lowest, Julie, since 2002. How accurate, then, are these numbers?
Well, the Bureau of Labor Statistics remains the gold standard for reporting on unemployment, on job growth, on different industries. It is the largest body of data that exists. And let me just say, the numbers tell part of the story. I mean, the numbers remain reliable. They remain, what is relied upon to evaluate our policies and also to look at what new policies we should be pursuing. But the numbers are part of the story. The other is that the president promised that he would build an economy from the bottom up and the middle out. And in the last under his leadership, we have restored the 40-hour work week for millions of Americans. We are making sure that retirement security is something that all American people can enjoy. We are looking out for workers who've been left behind in the past. I've been in Uniontown, Pennsylvania, talking to mine workers who've had to be exposed to silica dust. I've met with farm workers in California who put food on our tables but have to die in vehicles that are cramped without seatbelts. We are also addressing those issues. And so the overall numbers, again, are part of a story in which President Biden is delivering on his promise to build a strong economy in which everybody can play a part in it and see themselves having a secure future.
But back to this survey, that would put the standard error at 130,000. So it could be 305,000 or 45,000. Anywhere in that range is statistically accurate. How concerning is that, given this data is highly important, not just to the Fed, but also to the president?
No, that's right. I mean, the numbers are reliable. We continue to work on survey response. The people sometimes think, well, the numbers get adjusted each month. What is that about? That's also very much part of what we do. It's it's part and parcel of making the numbers as accurate as possible. So sometimes numbers come in later, and that's why we make adjustments. And again, this is the gold standard for a reason, and we do want to continue to increase the response rate that we get.
I just want to end on the fact that wage gains are less than what was expected. And when we continuously poll the American electorate, they're not worried about jobs so much in the sense that they're actually worried about inflation. And if the wages are not keeping up with inflation, how concerning is that to you?
So wage gains continue to outpace inflation. That means that there's more money in workers' pockets. This is obviously, as you say, this is a sign of how good people feel. And a good job changes lives, and a good jobs with wages that are enough to sustain a family are really important. And we continue to combat inflation and high prices. That's why the president's so focused on combating junk fees, on making sure that prescription drugs are affordable, and so it's a whole holistic approach to investing in the American people, and we are on the right track and will continue with the work.
Julie Su, thank you so much for your time this morning. Acting U.S. Labor Secretary, of course, Julie Su.
Anne-Marie Horton there with the Acting Labor Secretary. We have markets on the move. We welcome all of you on Android and on Apple CarPlay. The Bloomberg Business app, there is no cost. Actually, Michael Barr had to pay to go on Apple CarPlay.
Did he? Okay.
The car was so old.
What's wrong with
There's not a microchip in that car to save.
Wires on there. But in the H2, I mean, John's got it like in with no wires. It's a pretty good Apple CarPlay. There it is on YouTube, Bloomberg Podcast, and what it is, it's a market on the move. Paul, let's go to your statistic: 4.77% on the 2-year yield. It's a 10 basis point move.
That's a 10 basis point move here, Tom. And again, remember, just as you mentioned, just a cup of coffee ago, we're at 5%, so just north of 5%. So a big move in the short end of the curve here. Also on a 10-year, off about 8.5 basis points, 4.49% on the 10-year. I remember Ira Jersey saying, hey, if you get above 4.71%, this thing could move out to 5%, and that was just a week ago. That was just a week ago, and here we are, 4.49%.
High on the SPX, I've got on a daily basis 5254, and we're like 100 points under a new high on Standard & Poor's 500.
That was.
And you mentioned Dow 40,000. I mean, I really wonder how the cash crew reframes off of this game-changing jobs report.
Yeah, it is. I mean, we heard the Federal Reserve yesterday kind of pull the Fed Chairman Jay Powell pulled that rate hike seemingly off the table, and that was presumably enough for the markets yesterday to rally. Then you get this data point here today, which is a good jobs number, as the acting secretary was saying, but it is a cooling jobs market, and that's and that trend, maybe that trend is your friend if you're the Federal Reserve here, in terms of maybe thinking about a rate cut. So, and we saw that red headline on the Bloomberg terminal that the market's pulling ahead, that maybe that first rate cut to September from November.
And Mark Zandi's saying he's guessing Greenspan and measured where we started with a bunch. Paul, I got to go back. You mentioned Dow 40,000, but remember Dow 10,000. Yeah. And I'm sorry, the distance between a 3.9% unemployment and a 4.0% unemployment is not 0.1%. That emotional wallop of getting back to 4%. We didn't see it today.
Yeah, we didn't see it
today. But what's next?
And Mark Zandi, again, suggesting that would probably get the Fed's attention there, something 4% or north here. So, but we're right there as we were a few months ago. So, again, a pretty solid backdrop for this market. And, oh, by the way, we have earnings. And earnings, by and large, as we've heard from some of our guests, Jurrien Timmer calling out that 9% better than expected on the earnings front so far for the S&P 500. Yeah. So there is earnings growth. There is presumably a moderating interest rate environment, and I guess we're seeing that reflected in the futures here.
You know what I like about 9:12 a.m. on YouTube live chat?
Yeah.
All the contractors who take yours and my money, they're all out on live chat right now, talking like where to buy drywall.
Yep.
as they wait for the stock market to open so they could figure out what to do with their Apple shares. Yeah. Have you ever successfully hung drywall?
No, please.
I have never.
I have people for that.
No, hanging it is not the problem. It's taping it.
It's taping it. That's better said. It's like a science. It's like you got to go to Harvard Medical School or something to figure out how to tape drywall. Good morning, I'm sure here they are. 3M makes drywall seam tape. Thank you for that out on live chat. Well, look, 3M's doing well. How about that earnings report?
Yeah, that was good. They've cut their dividend a little bit.
They cut their dividend.
Yeah.
Did they do a share buyback?
No. Apple, $110 billion buyback. That's equal to their entire year of free cash flow, but why not?
We say good morning on this Jobs Day. Thank you for the comments on Claudia Sahm, Dr. Sahm, and Dr. Zandi joining us. That was a really smart conversation about where we're going. I hope the Fed tuned into that. Maybe we can. Could you see us in the minutes?
Oh, I'm sure.
Several of our PhDs listen to Bloomberg surveillance. That would be great. We could do that. Futures up 54, Dow futures up 462. It is Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Looks like we've reloaded the Fed rate cut bets. Wall Street now sees a cut from the Fed in September. Stocks poised to wipe out this week's losses, with the market also being buoyed by Apple's post-earnings surge. Buyback there that's making history. Non-farm payrolls, the big report of the morning, advancing 175,000 last month. That's actually the smallest gain in 6 months. And wage gains also slowed down. It's being viewed as a report that's not too hot, not too cold, just what the Fed's looking for. And as we look at the most actively traded right now in the pre-market, shares of Apple 7% higher. Amgen shares soaring. The CEO there saying he's encouraged by early results from a study of that company's experimental obesity drug. S&P futures 53 points higher, up 1%, just shaving some of the earlier gains. Dow futures up 452, and the Nasdaq futures up 279. That two-year yield 10 basis points lower. That's at 477. The 10, 8 basis points lower. That's at 449. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. But Paul, this list of Jobs Day guests we've had today, is just like absolutely
stellar. I know,
outstanding. I thought Jurrien Timmer, and then into Mark Zandi, and Claudia Sahm was just really brilliant as well. And it's about an American labor economy, and I'm going to say, Paul, it's a partition. There's people out there this weekend that are going, maybe they're not buying in the Hamptons, but they're saying things are pretty good. We're paying our bills. We're paying down our debt. We're moving forward. And there's a whole nother group that Dr. Zandi alluded to.
Yep.
To me, it's almost 19th century.
Well, it just highlights, one again, the income inequality, the equity inequality in this country, which seems to get worse and worse every year. And I don't know, obviously this is way beyond my pay grade. I don't know if it's a taxation issue or whatever else needs to be addressed there. But again, it's an issue. And you see it in some of the labor data coming out here. We do have wage growth of 4%.
Yeah, well, we'll have to see on that as well. Paul Sweeney and I really trying to piece together an exceptional week. And I'm going to suggest, Paul, a tipping point. I am fascinated, like Michael Ferroli, who we had yesterday. He has to publish tonight at 7 p.m.,
right?
And he finally has visible data that shows a shift. Yana Hatzius at Goldman Sachs reaffirming June. People thought Yana Hatzius and his team was nuts 3 days ago, 4 days ago. And now with the September rate cut you're talking about, maybe with further data, it's June-ish.
Yep, maybe. I mean, again, the June FOMC decision, that is June 12th. So we'll see how that plays in. I'm not sure the bond market is pricing in a September yet, but certainly pulling forward, if you will, a rate cut by November. And originally, I think the market was kind of discounting perhaps a December cut, but maybe now in November, maybe even a little bit sooner. We'll
futures up 54, Dow futures up 462. The VIX in a Sweeney-like fashion, way under 14, 13.82. Amazon not open, Apple not open for trading as well. We've been remiss. A few distractions. Apple. John Tucker, that's a big distraction as well. The Jobs Day, really profound. I mean, there's no other way to put it. And we forgot that there was a $26 billion offer for Paramount, Sony, and Apollo stuff. And you nailed this. You said by Friday, something has to happen. So Sony and Apollo make a $26 billion, here's the key phrase. It's like the triple leverage fund. All cash offer?
Yep.
How do you say no, Paul? Who cares what the details are?
Yep. So I'm looking at the reporting here from Bloomberg, the Financial Times. Sony and private equity group Apollo have told Paramount Global they intend to make a $26 billion cash offer for the entertainment company just 1 day before an exclusivity window is set to expire for a competing bid from Skydance Media. So it appears that perhaps over the next day or two, we'll get a little bit of a move here on Paramount.
Yeah, we'll have to see on that as well. Futures up 54, Dow futures up 461. Joining us now, Ira Jersey from Bloomberg Intelligence. Ira, just simple, into the weekend, is this a tipping point?
It may be. Certainly the market, liked the numbers. I think the wage numbers in particular were pretty telling. The fact that we downshifted now by about half from the wages that we were running in the November, December, January period. So now we've downshifted by half of that growth. And, given that services is such a huge part of the reason inflation has been loath to come down, it just seems that, the market's going to be happy with, this somewhat slower pace of job creation and wages. So it's, the market, I think, reaction is about right for the news that we received.
How much blood is there out there right now? I mean, price up, yield down in fixed income. There are a lot of people, Ira Jersey, betting the other way, right?
Yeah, so a lot of people had gotten pretty bared up, but not everyone was. I think there were a lot of people who were like skeptical shorts in the market, I would call them, and those skeptical shorts basically would be short the market via, say, option structures, right? So there was a lot of buying of put options on SOFR futures or Treasury futures, and so while those people are losing money and they had to pay their premium, they're not getting absolutely shellacked right now because they had to define risk as opposed to just being, say, outright short futures or outright short Treasuries. There is certainly some short covering going on. That's pretty clear in the price action that you're seeing right now. I talked to an investor this morning, or had a Bloomberg IB with him anyway, and he was saying that he was hedged for if the market spiked up to above 470, he was ready for it to go to 5%, but this isn't going to kill his return so far because he's gotten a lot of the shorts right.
Ira, pro tip. On Bloomberg surveillance, when you have a conversation with the acclaimed Bloomberg IB, that is a conversation, okay? That's like you're face-to-face over a beverage of your choice. A Bloomberg IB is that powerful.
Yeah, make sure Tim gets that in your metrics there, Ira. Talking about the 2-year Treasury, that has been a big move. We were just at 5% a couple of days ago, Ira. I mean, is this kind of moved right down to 475? Does that get your attention there at all?
It's pretty interesting, Paul, because we keep on pricing in and out another cut this year, right? And that's effectively what you've seen over the last week is the market saying, oh, there's only going to be one cut this year, and then suddenly now there's going to be two. And that's exactly what's been priced in. So the 2-year yield has been, and you'd expect this because it's the shorter term. It's much more sensitive to Fed action and Fed reaction. But that's going to be the average, more or less, of the federal funds rate for the next two years. So a 25 basis point move just implies, hey, we're pricing in near term, relatively near term, within the next 6 months, another Fed cut in this case that we weren't pricing just a couple of days ago.
Ira, we got Ludlow coming. Is Ludlow scheduled, Rich Truman? Did we talk to his people? Do we have Ed Ludlow coming up? We do.
Wow.
Ira, we're going to talk to Ed Ludlow. I think his bedroom is all Chelsea blue.
Is
that
okay.
disgusting?
I didn't know he was.
Ira, Aston Villa got a free lunch last night with the Tots lost, didn't they?
Well, yeah. So Villa, that was a big result for Villa, but Villa lost in the Europa Conference League, which wasn't good. But yes, for the Premier League to make the Champions League, it looks like we have a very good shot at the Champions League this year. So I'm really excited about that because we do have a pretty tough run-in with some of the teams that we play the next couple of weeks.
We got to do this, folks, or Ira won't come on. It's
we got to send him over to London to go to some matches, I think.
He does. Oh, trust me. No one works a trip to London for matches like Ira Jersey. Absolutely no one does that as well. Paul Sweeney and Tom Keene. Paul, I'm sorry, futures up 52.
Yep.
We're a little bit off what we saw here. It's 9:25 Wall Street time. I don't know. What's Apple do on the opening? You tell me.
Looking up 5, 6, 7% here. I think the $110 billion stock buyback plus a little bit of a raise to the dividend. They're, if nothing else, working for their shareholders in terms of deploying that free cash flow right back to shareholders, right back to them.
Okay. On the break, what am I going to do? I'm going to watch a YouTube video how to tape and mud your drywall. What a response. Good morning to all of you.
Make sure you get it really wet, though. That's the key.
Mud. You call it mud.
The
right?
mud, yeah.
Mud. Yeah, the dog gets in the mud.
You got to stir it up, even though it's pre-mixed in the can. Still stir it up.
Yeah, you do. Okay. Or you call one of the guys on live chat on YouTube and say, help, I need you now. Good morning out on YouTube, Bloomberg Podcast. It's Jobs Day.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The opening bell report, and ahead of that, futures indicate a higher open on Wall Street. There you have it. The opening bell at the New York Stock Exchange. In the driver's seat, of course, the jobs report. In the passenger seat, you had Apple shares after the company earnings. Right out of the gate, S&P 500 62 points higher. That's a rise of 1.25%. The index at 5127. Dow Jones Industrial Average up 531 points, a rise of 1.4%. And the Nasdaq 100 right now up 302 points, a rise of 1.75%. The company, Apple's posting stronger than expected sales last quarter, among other things. The results after the close yesterday. Wall Street took a slowdown in the jobs report as an indication the Fed's going to be able to start cutting rates as early as September. You alluded to it earlier when you said when things change, they kind of change quickly. Were you citing Rudy Dornbush? You told me that some years ago, and I still remember it.
Well, it does. The great Rudy Dornbush said so much in foreign exchange, but I don't think I'll just give it to the professor from MIT. It'd be a lot of other people as well. And it goes back to Keynes, when the facts change, I change. And that this weekend, John, you're going to see every single economist Bloomberg talks to has to reevaluate. No question about that. No, just absolutely the case. And are you done, John? Have you finished with your...
Yeah, I mean, we're higher. It's off to the races as far as risk on today.
Did you fill up at the Wawa on the way home today?
I usually do it on the way in. I also have a pointer for people who fill up at their competitor, the Quick Check. At 3 a.m., everything shuts down as their computers reset, so you can't get gas at that hour.
Pro tip. You see that? I mean, where else can you get
Very
that?
interesting.
Value add.
So I had to go to the Wawa.
Yeah, not right now. Value add in the market as well, up 1.5%, up 567 points. Paul, Apple, and I'm going to go to standard deviations for the adults here. Apple, 3.6 standard deviations up off the gloom trend that goes back to December.
Yeah.
That's like jump condition is the fancy talk for that.
Yeah, a lot of Apple bulls out there have been looking for the next catalyst for this name because it really has underperformed some of the peer Magnificent Seven names. And there's a lot of fundamental questions for Apple, but I think partially they answered some of them with this report here. And they say, we probably have seen the bottom in terms of our top line growth, and they're talking about getting back to revenue growth next quarter. And for a company that historically grew high single digit, low double digits, that doesn't sound like a lot, but they have not been growing over the last several quarters. And the question is, China, amongst other things.
We're doing a lot of value add here this morning. We do this with the Dow up 495 points, the VIX 13.8. When David's in, you ready, Paul? On drywall mud, you got to get the air out and fluff it up in the bucket. And on the Hawk First, dry mix works so much better when you fluff it up.
When you fluff it up?
Yeah. I mean, we go to surveillance, Bob Vilick wannabe, John Tucker. Have you fluffed up your mud in your drywall, John Tucker?
Yeah, and USG, I should point out, also makes a lightweight mix, which is for amateurs like us, it's much easier to work with. So I would go with that.
What we're going to do now is do what we do. Our team is scrambling with this equity market to get the best and brightest on the bond market. We have a very special guest who, Paul, I'm sorry, bring her in, but she has always said, you're not going to jump into the market if you're in cash. You got to be in play.
Got to be in play. Cameron Dawson, she's the CIO at New Edge Wealth. Cameron joins us here. Cameron, thanks so much for taking the time here. We've got a market that's up over 1% today. It looks like just in the last 24, 36 hours, we've gotten a market that feels like maybe this Federal Reserve yet again can be a little bit more dovish than maybe we thought just several days ago. Just give us your analysis of the past, 36 hours or so.
Yeah, certainly. The data today took the prospect of rate hikes off the table. We didn't ever think that those were justified, meaning that we thought that the bar for rate hikes was just so much higher than the bar for rate cuts, that the Fed would look through hotter inflation data, but would react really quickly to weaker employment data. So that's certainly what we're seeing today, which is just that it's not a weak print. It's just slightly softer. It just means that there's no urgency for the Fed to make any change at all.
Cameron, I'm going to ask the question. It's going to be out there in the zeitgeist this weekend. And of course, Cameron Dawson's got a conduit to the Eccles building at the Fed. Cameron, did the chairman know this jobs data when he gave that press conference?
He probably did. He probably did because he talked about how that there was certainly evidence that the Fed's hiking was having an impact on the labor market. And what we saw in the jobs data today is that it was the cyclical parts of the labor market that slowed down. It wasn't things like education and healthcare, which are not cyclical. It was things like leisure and hospitality. Right. So clearly there is some impact of a slowing in certain cyclical sectors.
Right. I looked at 4 accounting statements of a small company called Apple yesterday. Cameron, you're a legit student of this as well. I've never observed what they are in my life. They're running that company tick by tick for profit, not growth. Can they sustain that strategy?
They can sustain it for some time, meaning that you can outrun weaker sales and drive cash higher for a period of time. Eventually, though, you will have to be able to inflect sales higher, meaning that there's only so many levers that you can pull in order to get cash to continue to grow. We have to remember that Apple is also benefiting from these higher yields. With 5% cash yields and a massive cash balance, no wonder they can buy back so much stock. But at the end of the day, once you move past that, you really do need to see an inflection in the revenue growth in order to sustain such strong cash growth.
Out on live chat, Paul, gold down $21, breaching 2,300, 2288.
Hey, Cameron, just staying on Apple, when you see a company put out a buyback of $110 billion, I mean, aside from the staggering amount in and of itself, what's interesting is that equates to about 100% of their free cash flow. Is that what you want to see, you like to see, if a company's got nothing better to do with their cash, to just give it back to shareholders?
Not for a growth company, right? If it's a growth company, you would like them to be able to deliver things that are able to generate returns over the long run instead of just giving it back to shareholders. Now, we also know that these big tech companies are pretty frozen on the M&A side, and we also know that some of their moonshot investments have not turned out to be solid investments. Look at Apple unwinding the car investment, for example. So it clearly shows that growth is slowing. These are more mature companies, and so shareholders are celebrating it in the short term. But the question is, should you pay 25 times earnings for that?
Cameron, well, 25 times earnings where I want to go. We're hearing modeled out Jurrien Timmer at Fidelity leading on this 12% present earnings growth, all in 9%. Are you in the world of a high single-digit earnings view forward?
I think that it's very possible to do high single digits in 2024. The big question comes to 2025, where that's actually expected to accelerate into the low double digits. And the reason why it's accelerating so much is because the street has forecasted a new record high in margins for 25. Now, we never want to bet against the great American might of margin expansion. However, that margin expansion is extraordinary given the fact that you're already going to be surpassing 21 levels.
Cameron, thank you so much for being with us. Look forward to having you in the studio again. Cameron Dawson with New Edge Wealth. Tiffany Wilding with us now. She's just come off the desk at PIMCO medicating Jerome Schneider, who's never seen price go up like it is. What do you say to the bond animals today, Tiffany Wild, after a jobs report like this? Price up, yield down. Things are wonderful in Newport Beach.
Yeah, bonds are back, I guess. Yeah, I mean, so look, I think there is clearly the markets were positioned, clearly short. There's a big reaction to today's report. I think if you look under the surface, it really was kind of a Goldilocks report in some sense. The headline number, was more moderate than people were expecting. Looking into the details, though, actually, we think it was stronger than what the headline would have suggested. It was really government payrolls that really decelerated, and that has been a little bit of a sticky series lately. It's getting revised for whatever reason. The government's not getting their data in early, so if you kind of add some of that back, 200 to 230 is kind of where we think this number was, excluding that. So it wasn't that it was a pretty good number actually.
Tiffany, I guess if I think about the Fed Chairman Jay Powell's commentary, ostensibly taking the hike off the table, and now I see this softish labor print. Do I pull forward a Fed rate cut at some point this year?
Well, I mean, I think maybe the key news for the bond market was that the Federal Reserve is very far from talking about hiking interest rates. And if you look at, just the range on the 10-year, when we were at 5% last year, that was a time when, the markets were romancing more interest rate hikes and how many more hikes. And since the Federal Reserve has sort of taken, cut that side of the distribution off, it makes sense that the yields should adjust lower. And I think that he just further confirmed that at the press conference this week. And obviously this data, as I mentioned, it's a bit of a Goldilocks report. There's no need for the Fed to consider rate hikes here. That was confirmed. And I think the markets are just adjusting to that fact. That's really a pretty high bar at this point.
Exactly. So, and Tiffany, as we step back here and think about this labor market cooling, maybe some rate adjustments later this year, when you put that into your GDP model, what kind of kicks out for the remainder of the year? It feels like it's going to be pretty decent, I think.
Yeah, exactly. I mean, underlying all of this, we still have a very strong economy. As the first quarter GDP report, the headline was also maybe a little bit weaker than the underlying trend. If you look at final domestic demand growth in the United States, that's running around 3%. And it looks like the second quarter is going to be pretty strong as well. So overall, growth is strong. The labor markets, they're also not weakening here a lot. Obviously, they've eased from the very tight, labor supply imbalances that we had post-pandemic. But ultimately, things are chugging along here. I still think that there's a risk that the Fed has, that inflation just doesn't moderate back to their target as quickly. When we look at the math for the rest of the year on PCE, we think it's going to be actually kind of difficult to get the year-over-year rate under 3 unless you have some pretty decent weak surprises in the back half of this year. So the Fed ultimately still has an optics problem with inflation.
Okay, this is really important. I got one more question, Tiffany. We're stacked up here. Ed Ludlow's having a tantrum because he's not on yet. Tiffany Wilden, really, really important question. You've just described a price change America that is not in disinflation. Do you anticipate we will get a disinflationary vector at some point?
Yeah, I mean, look, I think that we've always said the last mile will be more nuanced and slower than the disinflationary forces we got last year. The supply side benefits, they have run their course in our view, and it's just going to take a little longer. And I think the Fed was very clear that they're prepared to delay cuts longer than they were before.
Are you buying something from Apple this weekend, Tiffany? That's what we really want to know. I mean, talk about a roll. Tiffany Wilden, thank you for being on with us off the floor of PIMCO with all of the different bond things they're looking at. And on bonds, price up, yield down, the 10-year yield 4.49%, under 4.5% in 9 basis points in way over the last number of days. We're commercial free with the markets on the move. Dow up 531 points. SPX up 62 points. I got a NASDAQ 100
how about that?
At 1.8%, 13.82 on the VIX. The Sweeney yield is 4.78%. Wow, from 502, 503 in 25-ish basis points.
Wow. Yep.
Over what?
That's the market
3
telling
cups
you
of
something.
coffee
Yeah,
or that.
exactly.
What we want to do, we're gonna end on Apple. Ed Ludlow's going to join us here with this miracle share buyback program. But before that, we wanted to talk to somebody who's incredibly in the trenches on the new job economy, and she is best qualified. Julia Pollack joins us now, chief economist at ZipRecruiter. I think JP Morgan may take them out this weekend. I don't know. Julia, what are you seeing at ZipRecruiter? Are you seeing that the job economy is becoming tepid?
We are seeing the job market stabilize and normalize at a sustainable and healthy level. We're seeing employers get out of that wartime crouch they were in 2023 when they were sort of more convinced that a recession was around the corner and start thinking about long-term strategy. and address their pipelines and their training programs and improve their recruitment processes as a result.
Hey, Julia, one of the narratives that's been seeping into the labor discussion over the last 4 or 5 months is the impact of immigration, legal and illegal, that we're seeing in this country and how it may be impacting the labor market and the broader economy in general. What are you seeing at ZipRecruiter?
So we've seen applications per posting rise over 10% over the past year. So we've seen a big improvement in labor availability, and that is partly due to these very, very strong immigration numbers. We're also seeing a lot of job seekers have some difficulty find work, even though the economy has been adding over 200,000 jobs a month for the last year. So there are lots of jobs to be had, but there are also a lot of job seekers going after them. The unemployment rate for foreign-born workers has risen by about a percentage point over the year. So clearly, we're bringing in a lot of people who are looking for work. And that's probably part of the reason that wage growth is coming down. And the wage growth number is very soft today.
You may not do this, Julia, but do you model out an unemployment rate? Like, is it a big deal at 3.9%? And does ZipRecruiter say we're heading towards 4.x% unemployment?
Yeah, so we do think that if interest rates stay this high, the labor market will continue to gradually cool. I mean, they put a slow squeeze on the economy, and we would see the labor job growth gradually decline further and unemployment tick up. That is very much what will likely happen, unless at some point inflation, data gives the Fed more confidence and they're able to start cutting rates.
All right, hey. It's May here, a lot of graduations. How's the job market for college graduates these days?
That's an interesting question. So in sort of white collar fields where there's a lot of remote work, attrition has fallen a lot. When you convert office jobs to remote jobs, people don't quit. They stick around. They really, really value that opportunity. And so what we've seen is this economy, especially in white collar work, shift to a sort of stay in place economy where companies are focused less on new recruitment and more on retaining the workers they've got. That means for new college graduates, this is going to be a slightly tougher market. That said, there are lots of jobs out there, right? The economy added about 100,000 more jobs each month in the first quarter than it did in 2019. There are jobs out there. They're just not necessarily in the places you want them. They're not necessarily in marketing and fun office areas.
So if I look, just for instance, Julia, if I want to be a drywall finisher, and I go to ZipRecruiter, I'm going to pop 20 to 22 hours working as a drywall finisher, where I'm using my mud and using it with air and doing perfect drywall. How can that job, Julia, compete with Amazon at a $17 base pay, and John Tucker's quitting next week to go make $170,000 a year and UPS go brown? How do you compete in your world, Julia, with $17 big box wages?
So we have seen a big divergence in confidence levels between the big businesses and small businesses. Small business confidence is at a 12-year low. Big businesses, however, are feeling more confident about their ability to project revenue, and their hiring plans are going up. It is very, very difficult for mom and pop shops to compete with the Amazons and Starbucks of the world that increasingly are not just paying very competitive wages, but are also offering Cadillac benefits like IVF benefits. Very expensive benefits packages. So yes, it is tough. It's not easy out there for a small business owner.
Love talking to you. Julia Pollack, thank you so much for ZipRecruiters. Carpenters, good morning. $25 to $30 per hour.
Is that right?
Yeah, they say you have to have previous skills, so I guess I'm out.
Yeah.
Thank you on YouTube Live for talking to me about drywall today. I was really like the worst ever.
Don't forget to tape the seams.
I know, I tried to tape it. Then they told me to take a long lunch break. Joining us right now on the left coast, he was on fire yesterday. Edward Ludlow joins us on the share buyback with Bloomberg Technology, but also we got a lot more to talk about. Let's try to cram it in here to end the hour strong. Ed Ludlow, 110 billion share buyback. Do the lemmings of Silicon Valley copy what we see at Cupertino?
You sympathize with the people all around the world, be they investors or not, that ask, well, all of these tech companies have all this cash. Have they no imagination on how to use it? I don't know if you guys read the story on the Bloomberg terminal, but we have a table in there. You know, a picture tells 1,000 words, right? And the last record share buyback, any guesses who it was?
I'm going to guess Apple.
Yeah, Apple, 2018, 100 billion. And the one before that, Apple. Right. And the one before that, you know, and it's an interesting story. You know, it's been in vogue, has it not? You know, buybacks and divvies this earnings season. But I think a lot of people ask, well, hold on, Apple, you are Apple. Give us some innovation, give us some technology. And if you spend a few $1 billion to get there, we won't mind. But I would say, like, with the stock up almost 6.5%, that's probably the catalyst, isn't it?
Yeah, and I guess, you know, also, I mean, it's not like they don't invest in their business. I mean, the CapEx for Apple is going to be, you know, north of $10 billion. But, of course, they have their big CapEx is R&D, and they don't skimp on R&D either. So what do you think, as Tom was suggesting, the messages for some other of the big Silicon Valley technology companies? Is this kind of removing maybe a little bit of a taboo on returning cash to shareholders?
I think there's just a disconnect between the logic that the market's rewarded the other tech companies for and Apple. So tech companies are saying to get into artificial intelligence, you need to spend billions of dollars on data centers for the compute power to train the models. That is a tens of billions of dollars exercise. So we reward you, we cheer you when you say that you'll commit to that. You mentioned Apple's CapEx. I think Tom noted this on social media, that the buyback is more than all of the CapEx of the last decade added together. And so, you know, AI is costly. And so the logic is simple. If Apple's not demonstrating its spending at the level of everyone else, how does it achieve AI?
You know, I make jokes about it, Ed, but seriously, and it's what you do at Bloomberg Technology. How are we going to use AI on our iPhone? And we're making jokes with John Tucker about it, who's still got a BlackBerry. But seriously, Ed Ludlow, what is your best guess what the first thing Paul Sweeney and I are going to do with AI on an iPhone?
Yeah. I had a relatively combative discussion with the CEO of Qualcomm yesterday on the show about this. He is staking his company's future on the idea that we pick up this thing, the smartphone I'm holding on in my hand for our radio audience, and we just spend more time on it. That a generative AI tool, one, pushes us to spend more time on our phone, but it saves time. You know, when we talk about generative AI, we're talking very simply about a tool that is the translation of text into more text, or to voice, or into an image. And that's what, you know, we're yet to see Apple demonstrate, that they're going to make something akin to that for the iPhone.
Yeah, we're going to have to see on that. Ed Ludlow, we got 2 minutes left with you. I mean, you were out this night. I said, you know, his bedroom is Chelsea blue. I mean, you know, it's like he uses blue china, blue this, and blue that. I mean, Premier League this year is pretty darn exciting. And once again, the Tots can't get it done. Tottenham can't get it done.
Yeah, look, I have been a Chelsea season ticket holder for 21 years. The Premier League's first season was 1992, the year I was born. And in that time, we have beaten Spurs home and away 10 times, more than any other team apart from Manchester City. And it's been a really hard season for us. But if there's, other than death and taxes, if there's one reliable feature in my life, it's that we will beat Spurs. And I enjoyed yesterday's game. And by the way, my dad was with me from the UK. He's visiting. So it was tremendous.
Did you let him drive the Tesla?
He is very interested in the Tesla. I'll talk to my insurer and see what they say.
Good.
The whole wrong side of the road thing, Tom.
It's amazing. Huge value add. Ed Ludlow there on Apple and technology. Look for Bloomberg Technology as well. Lisa Mateo is hanging with Anurag Rana.
I know.
I thought she went to Miami to the Formula One. And she's like out in Chicago doing like the ultimate cloud thing with Anurag Rana.
Big technology with big technology company executives. She was out there in Chicago, you know, hosting some discussions out there at a Bloomberg conference.
It's the business value of AI in Chicago. You can't enter the place unless you're wearing Dior. She's like styling.
I know. And then I think she's on assignment again sometime next week. I mean, we just, wherever we need somebody really smart, we send Lisa Mateo.
Don't send me.
You know where they sent me? Under the Bayonne Bridge.
Yeah. And now, actually, with the terrible traffic, we should mention, folks, I-95, I don't care where you are from Philadelphia north.
Avoid.
This weekend's going to be a mess. It is shut down east of Stamford, Connecticut in Norwalk. Joe Michael Barr will have much more on that in Bloomberg Radio through the day. I'm exhausted. How about you?
It's a good week. Let's do a couple more hours here. Why not?
But again, you're going to do
I mean, it was just a lot of earnings this week, Tom. We've got about 80% of the S&P 500 have now reported their earnings. You get a good sense of what's happening. We've got earnings growth about 5% year over year on average for the companies that have reported. We've got a Federal Reserve, Tom, that seems to have signaled, maybe with some knowledge of the labor market, that they're going to take some rate hikes off the table.
What's long only buy side doing right now? They're 7% in cash, and somebody's looking at them going, how do we settle up here 6/30, 2024?
Exactly. Yeah, you need to start playing some catch up here. So again, you got the S&P 500 up 1.4% today on the back of this print.
We say thank you to all of you in our new digital effort, Apple CarPlay, Android Play, on YouTube. Just thunderstruck at the build out there, the different podcasts we're doing in that. Search Bloomberg Podcasts and go there. And they said, we're doing a live chat. And I said, I don't care. Yeah. And they said, no, all these people on their staff, they all wear black. They've all got tattoos. They brunch. They don't brunch. It's too cool for that. They're in Brooklyn having breakfast.
Exactly.
And they said, we're doing it. And so we're doing it. Good morning on live chat on YouTube as well. They took a Neve board from Los Angeles and took it up to somewhere in the vicinity of Seattle. Dave Grohl recorded Stevie Nicks. Good morning.